here. Good, good, good. Not as good. Definitely looks like it's positioned down. We'll see. I don't know. Any examples of this where it goes up? It just keeps going up. Good morning. How are you? Good morning. Oh, what a day. What a day. Well, we'll get to AMC and GME in a minute. I was just checking out this move on the Russell. Kind of curious. Let me go to like the 2 hour or something. Yeah, alright, that's what I thought. So there's a kind of a weird roll here on the RSI, but it's only on smaller time frames. It's not really like, this looks bad, right? Because you're like, oh, it's going down. Well, I think that was the move. I mean, I think that was the correction. So I think that's that. I mean, there's no guarantees, right? Anything can happen, but it's pretty straightforward. I think that the lower time frames were looking a little bit overdone, and they look like they're gonna top. You look like you're topping off, right? When you just stare at like a 15-minute or something. That's not really the case. You've got a good chance here of positive today, because really, like, again, that's on the 15-minute. It's just crossing the EMA on the 15, and then you can see that the 1 hour is up here at like 202. That makes sense. It's kind of right on that marker that we wanted to go to. This makes sense as well, because this would be like a creek recheck. You know, it didn't come down very low. That was kind of surprising. I mean, I guess it's not impossible that it's not over, right? I mean, you could have it chop and still drop again later. But there's nothing here on the 1 hour that looks like it's ready to just drop. And I'm going to the 4 hour. I haven't done that yet. Yeah, it just looks like it jumped back over. So, like, if we're right about what our theory is here on this as a potential bottoming action for an S curve, and we may or may not be right about it, right? But if we're right about it, then I think we'll see it build support over 202. So that's kind of what I was like eyeballing first thing. Oh man, so MPW looks bad this morning. So if this is the spring, like, I don't know. There's not a lot of volume here, so it's possible like we just get this really rapid turnaround. You guys are like, what are you so worried about, dude? It's just going down. Well, because it's building out as if it's not... I mean, I don't know how to say this. It's building out like as if it's not really ready to go. And like it looks like instead of that spring action, we're getting like this like curtain rod drop. I really don't like that. So it had a double up thrust over the prevailing creek here, and then it had this fake advancement locally on Tuesday. And so at this point, like, I don't want to see it continue to drop, like, because this is not a good place for it to be. So I'm in the mindset that, like, we'll see. I'm still not saying the ship has sailed necessarily in this case, but it looks not good. So there might be a desire to, like, really drive this down and, like, trade again lower before any kind of move up. Frankly, I think it could go pretty low. Like, this could head back down to, like, the 430s. I'm looking back here. I'm not really seeing any, except for this gap below. I guess that's kind of the only thing I could see that might be like a motivating factor for bears here. And then the way that these FOMC meetings and decisions, the way they hit the different sectors is often different. So not panicking, just kind of watching it. And this just makes me wonder if we're building out like a larger backup, basically. So like I don't want that because in this case, the range here looked really good. At least in my opinion. I mean, there's people that probably will look at this and say, well, you're dumb. That was a UT or something. And I don't know. I guess it's possible. Like if you look at this as the auto reaction and then a sign of weakness, phase B, and then a UT. But that's not the way I was viewing it because I felt like this was the auto reaction. It's usually more typically like this kind of really, really strong reactive move off of a bottom. So, I don't know. If I completely misread this range, it really stinks. But, again, bigger pictures usually prevail, so we're not really seeing any kind of a local jump, and it's already beneath, like, most of these other time frames, I think. So, yeah, it's dropping. That's the 4-hour drop. So one thing that might be positive here is the last time we dipped beneath the 4-hour hard was back here on the 7th. And it had a pretty strong reaction. This is a little different this time because you can see the setup certainly looks like it could kind of slide. But then I would also say, you know, okay, well the last time we were really oversold on the 4-hour was way back here on this bottom. So the fact that we might be going into an oversold territory up here versus down here is pretty good. I mean, that's still a good sign. I do think the trend in general kind of broke here, so it's not looking great. You know, if I'm just trading based on the trend, then I'm out because that's done, or at least it looks like it's done, you know, for now. So to be honest with you, MPW is looking kind of bad. Kind of bummed out about it. I'm not gonna fuss about it anymore. I'm just gonna kind of leave the chart as it is, and then I'm kind of interested to see what happens by Monday. So I think the next 2 days are still part of this sort of weird week where you've got only 4 trading days, and you're probably gonna have volume in different stocks at different levels that they normally are. So I feel like, I don't know, what we might be seeing is some kind of like an actual spring bottom here. Like this was an upthrust to drive the price lower, and then we'll see. I mean, if it doesn't react strongly and come back up above, I would say 478. I said 485 at first, but I actually think it's like 478. So both of these. So I think if it doesn't come back up pretty soon, then I'm talking about like in the next couple of days or by Monday, I'd be much more concerned. I'm just kind of going to wait it out. The market just opened. It's been open for like 10 minutes, 15 minutes. It's not really worth freaking out about yet. AMC this morning, I was looking at the pre-market action because I saw some folks were saying, I don't know, man. Every time the stock budges a little bit, people say it's mooning or something. It wasn't mooning pre-market. It went up like 0.5% or something. I don't know. I think folks were just expecting a big move, and so maybe that's why you see the big move start, and you're like, oh, it's starting. And you want to get excited about it, or maybe you got notifications or something about, hey, if it moves X% or something like that. I don't know. But, excuse me. So I'm going to remind you all what we talked about with this breakdown, which is that basically like when this went to an upthrust here back on Friday, the 14th, and the price drove really low. So excuse me, part of that was that we were thinking like, well, it's going down because of max pain, which makes sense. You're going to end the week, you know, pretty close to that $4 or $5 mark or whatever it was. And so you're looking at, well, that could just be a drive down, right, for that. So for most people, they're going to be seeing that. If they're not paying attention to everything, they're going to be seeing that as just like, oh, it's just driving down to max pain, and that's that. And if you ignore the TA aspect of it, and you're just looking at like options and all that stuff, that's probably what you were thinking. We were going back and looking at it, and we were like, well, technically that's an upthrust because it broke over the top of the range here. And as a result, you don't expect it to just come down to the bottom and then reset. That there are times where weird stuff like that has happened on AMC, and it just kind of ignores all convention and goes. I've seen a few of them, and I'm not just saying that, to temper expectations, but I am saying that it's true. Like sometimes there's weird things like that happen like that, and specifically on AMC, it seems to do a lot of these massive flushes right before it moves. So sometimes that doesn't end up panning out, but in most ranges, like on average, we would say like 90% of the time, that's an upthrust. That means you're going to break down below the bottom here. Okay, so then I'm looking at this like, all right, it's a cat here. And then what my expectations are, well, probably going to get an LSPY, and we got that. And then you got another one, and then you hit a low. We'd measured it out based on where we think that floor is, and where we think that last support was. And we basically decided at that time, probably 462. And then I did a measurement again later, and I was like, well, the fibs are up here at like 469. So it may not make sense to go all the way down to 462. And it doesn't really make a huge difference anyways, because we already knew that, like, well, if this goes down, in a hooking action, it's not going to really make any difference because it's eventually going to break down anyways. And if it goes down in a spring action, really, what's the big difference between 469 and 462? It doesn't have to hit a fib level. So I had posted in the Discord that I thought that probably 469 was more likely as a floor, or like 470. It ended up hitting like 470 over here, but maybe 471. But I think it could go a little bit lower, and the fibs are like right there. So it is what it is. There's nothing really new here to talk about other than like the fact that we already called it out. So it's not yesterday. I'm sorry. It was Tuesday. This was my expectation, was that we would come up, and we went higher than I thought we would. But then again, we did come all the way back to retest 5. So there's that. Then come back down, and I don't know. It looks pretty much like what I drew. I wasn't really expecting it to advance again early. I said in the event that it did, you'd have to jump over XYZ or whatever, and I drew it out for y'all. But that didn't happen, so we don't have to worry about that. GME, on the other hand, a little different, not too different. It had a kind of a fake advancement of the creek on Tuesday, just like MPW did. So it looked like the market was kind of just positioning itself to, I don't want to say bull trap, but it's kind of what it did. It was like everything kind of set up like it was just going to go on Thursday. Like, oh, we're pushing above. Also, I'll say this, okay? If I see something like that, I'm usually pretty skeptical. And I didn't say that I was. I just said, okay, we're doing a little creek push. That's all I said on like the Discord. But if you see something like this, where like you jump a creek in the last like 2 minutes of the day, but there's no support, I would say that that's probably going to end up being bad, like a head fake. You might say, well, Booksy, what if it closes above the creek? Isn't that enough? No, I'm done with that. Because in like layman terms, I would say, yeah, that should be enough, because you're showing strength by pushing over and closing. And it's like when we close above certain values. But in terms of like the way that retail is manipulated to giving up their shares, I don't believe it unless I see support anymore, because this happens so often. And it's exactly like the way that we've seen AMC break down in the past, like frequently, where we just kind of we do one of two things. We either drive the price right back up through like a creek or a support, and then we drop, or we just straight up have like a gap through. And in some cases, it's both. This one's both. You can see like there's always like this kind of effort to sort of trap bulls like last minute. And so like back here in like March, we had something similar with that hook. It never really breached like the top. It really just rejected and then dropped. But if you look at the supports, it just pushed above the support right before the close, and then it just gaps down through it all, right? And you have a big rug pull. So I'm kind of like in my brain, I'm starting to think I need to be really careful about that and try to call it out when I see it, because I saw it and I was like, I kind of hummed and hawed about it, and I just decided to be neutral and just say, let people know, like in the Discord, like, hey, I think pushed a little bit above the creek into close, and that was all I said. But I think that wisdom would say at this point that we need to be careful about that kind of stuff. It may not matter in the end, you know, it may not define the day's price action here at all, but I think for the initial move to the drop here, it makes a lot of sense, right? Because you're looking for like paper hands and those kinds of moves, and then the stop loss hunts. It's a very easy little liquidity trap, and it's very small in this case, really small. So for GME and AMC, here's what we need to see today. We've seen everything we want to see so far. I won't say it's perfect. I don't think it's perfect. The fact that this came down lower could be bad, but I don't think it's necessarily bad. It's just one of those things that I kind of keep in the back of my head, that the secondary push down being lower, again, it could be bad. In this case, here's what I would say about it. If you get a push down after you jump the creek, so that means, like, let's say, for example, this had already jumped over and it went up high and then it got a low push down. I would suggest to you that that's usually bad, because what that indicates to me is that you've made your auto reaction, the high push up, you've broken that creek, and then you've driven the price to a new low, and that sometimes is a sign of weakness. It's difficult to determine that just based on that alone. You'd have to know where you entered the range, how high it went, whether or not there were supports, right, or some other kind of reasoning, you know, in terms of that range build out that you might have gone back down, because AMC does that sometimes. It drives the price up in an auto reaction and then goes and makes another low. Of course, at the same time, we know AMC has been mostly bearish over the last few years. So, like, on average, it's bearish way more than it's been bullish. You know what I mean? So, like, then we would say, well, maybe that's a sign that maybe that's just a sign of the times, right? Like, the fact that it keeps doing that isn't necessarily a good thing, but it does do that sometimes. And again, it's kind of debatable. We've seen ranges that do stuff like that, and they're not really all bad. Here's what I think about this. So if you're looking at GME right now, I don't think that it's even broken the downtrend. So this is all like localized. All of this stuff going sideways here is just to get you, in this case, it's not the same as AMC, but in this case, it's just to get you over to the actual trend. And we may call it a creek, whatever you want to call it. It is a trend in this case because there's two wicks set up high for it. And so I don't think that there's much else to say. Like, this initial M was for the lower creek here, the one that's set up on this very last minute. It's a really small amount of trading. If you look at it, it's just an hour of trading here. That's like all it took was to develop like a resistance, and then you have to push against it and jump it. So that was the first shape. The second shape is going to the second mark. So thus far, has anything really happened on GME here? No. You guys are like, well, I already knew that, Booksy. Well, what I'm saying is that, like, if I'm looking at this and I'm trying to measure whether I think this is accumulation or distribution, okay, I have to answer like the basic question, which is, where is it? Is it really a bottom, or could it just be a small part of a bottom? And the answer is, I think it could just be a small part of a bottom, because at this point, it hasn't even driven out from the main downward move. Like, this creek coming down, it hasn't broken it. And again, a creek isn't necessarily like a rigid structure, like a trend. But if we were to look at this in terms of like, hey, where was the downward resistance? We would say it was here, you know? And like, that's all there is to it. So at this point, I'm not like trying to be pessimistic. I'm just saying, like, realistically, has it really done much of anything? No, there's not really much to say. Does it look like a potential wedge action? Yeah, it could be. But it also could be like a descending triangle. I mean, it's very flat, and it depends on how you draw it. So it's one of those things where it's like, I don't really necessarily think anything nefarious. I just don't feel like there's much to say about it just yet because it hasn't broken out of the main creek, and therefore I don't really know if this is an actual full bottom action yet. It could be, but we would need to see like an auto reaction and then a build back out. So we need to see a breakout and then some kind of a support, basically. And we don't have that yet. And that would be a big part of the bottom. So none of this is a breakout with support. It just isn't. It's all like dipping down through this 24 level to see what you can see. Maybe some of it's shakeout. Maybe some of it's, you know, other tactics. They're going to still drive the price down again. Maybe we're going to have some kind of a localized spring action. I've contested that I don't want to see it go below the previous bottom. I've told people why multiple times. If you're of the opinion that we do need to go down there, I would just suggest to you that it would be far more bullish to do it later. It doesn't have to be this long later. It doesn't have to be way over here in July. Okay, but to do it later would be much, much better. If I'm being very structural about it, I would say that that would be an ideal place to do it, or, and this could be kind of fun, or we could have a very rapid fire phase B. This could be really cool, actually, where we break out here and we go straight up to the top, right? And then we come rapidly back down. So we go up and make a new high at like whatever it ends up being. It could be like 40 at that point, I guess. And then drive the price low very, very quickly. And that's totally cool. And it doesn't have to be a spring, but I'm just saying, if you think that we need to go down to 18 or 19 something, and you're like, man, I don't see how this thing runs unless we go to 19. I mean, there's not much you can do except cheerlead, but I would be cheering for this to break up first, like to go up high first, because that would be better in this case, not break beneath the low that was made, because that would show strength on the part of GME. If I saw it move up, I'm being dead serious here. If I saw it move up to this high, I would be still expecting a pullback. I wouldn't be expecting it to just moonshot, though a lot of people would probably want that to happen. I would be waiting to see if there's an LPS or a spring, and I'd be very bullish about it. If we drop now, I don't know what to say except like most of the time that's not good, and most of the time if it then builds out a bigger range, it's distributive, but we'd have to again kind of wait for the range to finish. It's just, I'd be a little more pessimistic about it. I'd have to be, because that to me could be a sign of weakness in a bigger setup. I think this can be a local spring, but I don't think this should be the biggest spring of all. And you guys might disagree, and you're like, dude, it's going to just rocket on Monday. Maybe, but I mean, the rocket could be a big move up to the phase B top, and that's still like 60%. I mean, that's a big move. So, like, I'm not exactly being bearish by saying it goes up to here and then comes back down. It's really just more about whether or not that setup pans out that way. And currently, the auto react, or the main reaction from this downward move, the 618 is at 36. I think it's very reasonable, considering like this wedging action, that it's possible that we get a 618 move at least, which is again 36. It makes a lot of sense to me, which is why I put this up here. This much makes sense, seems very probable or possible. Like, if you're going to make this bullish, you'd want to come back up. And if you don't really care either way, then sure. You know, if you don't think that this is necessary, I don't know. I mean, there's also a wedge here, but the wedge itself hasn't finished. And I think this is where a lot of people are looking at going down to 20. They're like, well, if it breaks down, it's just going to drop to like 20, right? I can't really say much about a wedge. Then I'd have to interpret this range a little differently. And like I said, it'd probably be, in my opinion, perceived as a sign of weakness. But you got to remember, like, typical wedge breakout is like a 62% retracement. So if it came all the way down to like 20 bucks, for example, your 62% retracement now gets you just back to the automatic reaction, which starts kind of making it look a lot more like that's now a resistance at 33, and you're not going to go more beyond that. And so, again, I don't really like that, or I don't really like that for us, even though I can totally see it. Not blind, you know. And certainly if like this were to break down here distributively, I could see that being like a 50-50 move. This is the challenge of any kind of a, we'll call it a fractal read on something, that you could pretty easily see how this could just be like a 50-50 move down to the 21 area or something like that. And yeah, and a lot of it depends on the build out here. I mean, if it doesn't push the creek, it doesn't go. So it's that simple, you know. And the operators that be on this stock are definitely feeling it, I'm sure. Like, they're going to want to shake out as many people as possible because there's a lot of retail involvement on GME. A lot of retail involvement. So basically, I guess what I'm trying to say is if we don't see a push above the creek here today, then I don't know where else we're going to go except obviously down. And frankly, like, there's not really any room to do anything else today in terms of a rebound. So I would want us to stay above that 2275 area, and then ideally like go ahead and break out here and exit this downward track that we're on. Because if we don't, then I think people are going to get their way and we're going to go for that bearish move. And it's a bearish move in my opinion. The same goes for AMC dropping down to like the 430s, which a lot of people are calling for. Like, they're saying, oh, we got to drop down to 430s. We got to go back and get support here. Well, I get it. It's a historically strong support. It makes sense. But I kind of rather build support at 494 or 481, you know. Like, I want to build out this way. Then if we need to make a spring later for liquidity, we go for the spring later for liquidity. I don't like the idea of just driving the price down continuously. And this definitely looks like that classic four top that we talk about. So it looks like it's having trouble and it looks like it's not advancing. And ultimately, we might just be in that situation. Every other day I'm like bearish and bullish, but that's because the price action right now hasn't resolved. We haven't gotten our answer yet. It's easy to look at this in the big picture and see how a drop low, and I'm thinking like 380, 390, like this pocket seems very possible. I'm just not of the opinion that we want it, like, necessarily. I don't think that necessarily yields the kind of the bigger run that we want to see. And there's things that could be really positive about that, but I don't really find it like long term. I think we could say there's probably a lot of positivity that could be drawn out of that, but I don't really see it as necessary. Like, we've already checked that creek twice, pushed away from it. So if that's the action, if that's the primary action, is like, oh, we've tested this support here and now we're pushing up high, well, then what the heck was this? You know what I mean? Because if this is designed to drop you back down again, then more than likely, like, this is this is distribution. You might say, like, well, what if all that was just to get you down there and we just didn't go far enough? Like, we didn't go back down far enough so that they went up and just, well, that's exactly my point. Then this just turns into a distributive top and you have some kind of rapid fire M cross here, and we'd have to go back and look at, like, where does that creek lead you and all that stuff. So there's a lot that you then have to kind of read into it, and it's not necessarily good, you know. This is where things get kind of dicey. You're talking about, like, coming real low and trying to break through some lower trends, test them, it's just not where I want to be. I mean, it's that simple. We'll deal with it if it happens. It's not like I'm going to ignore it and pretend like it can't happen. It can definitely happen. But it's more like within this setup thus far, a lot of this looks like it could still be very bullish. It just needs to see that jump. So for AMC, the jump is a bit higher. In my opinion, it's like up here. It is like that 494 level. There's a micro jump that we could make today or tomorrow or Monday. It's basically just draw like a local trend down. It's essentially, that's all it is. So there's like 3 hits on it. And you could see that happen and then build out. Again, technically speaking, from a, this was more of that doodle that I was talking about earlier. From a range standpoint, this could last till Monday, because if you did find support today and you push back up, you could just have like a secondary motion back down and then just sort of kill the price action into the end of the day, Friday. I think it's possible. I don't know if we're going to see that, but it seems possible. So optimistic. Booksy was thinking that this looked pretty good because you have these kind of high volume bottoms here, and that looks pretty good. So if this ends up being a bottom, that's good. But based on the way it's set up right now, it does look more like that classic like second cat ear drop. So we'll see. And I guess I could bring up that diagram real quick. Let me just take a look if I can find it. Maybe it's on this chart, maybe not. Yeah. It's not on here. So the difference between a spring and a hook is usually that the hooks tend to have like flat bottoms. So you end up getting like an up thrust and then you'll come low. The U-shape action is historically very, very distributive. You trade really low. You kind of, it ends up looking like the cat ear, but you end up sometimes with the UTAD, sometimes it doesn't come as high on the last push. It just tries to go across the creek and fails. But you have early on in the range, you have weakness, so they'll make like lower lows, might look a little bit like a widening, and then it kind of fails. And sometimes it'll look like a head and shoulder in the end. Doesn't really matter. The point is that you spend a lot of time in the lower 50% of the range. So if we were drawing this as like a range, you would say that you spend most of your time trading in the bottom half. That's much more distributive. You get high volume tops. So the tops themselves have a lot of volume in them. So when we went back and looked at this area, that was my biggest concern about this area, was that the volume was all in the tops, like all concentrated in these like push-ups. And then there was volume in the bottoms, but it was super light, like really light volume. So it looked like a series of short coverings is what it looked like, which again, they're kind of using FOMO to sell their shares while they're also covering. So they cover and then the FOMO that follows, they use it to sell again. And that's the action of distribution. So this doesn't look like that. So I'm kind of like still thinking that if we can get this guy to move across, we'd be in a good spot. Because this is kind of the opposite. You have these like higher volume bottoms, and you're seeing that the tops themselves are very weak, you know? So it looks accumulative to me. It really does. And that's good. It's kind of the opposite of what you see in a distribution. So even though like the price action this morning looks kind of grim, like everything's down a little bit, if we can get this high volume bottom here today, I think we're going to have a really good turnaround today. I don't think it's necessarily going to rocket to the moon. That's not what I'm saying. But I think we could probably come back up and retest 495, and then we'll see. You know, I don't know about the rest of this, but maybe we do have a big Friday. There's a lot of space here. I don't know what max pain is. I think it was 450 on AMC, which is quite low from here. That would be a breakdown below the previous bottom. So if by design that's where we're going, then that's where we're going. But I have some confidence here because of these bottoms. So if you don't quite understand the idea of trading, you can always trading in highs or lows, you can always do a simple range. So you can use like a 50-50 tool, and you just kind of got to make sure you can define the range. So in this case, the range is almost shared, right? Like the 50% is basically shared with the previous area. So that might kind of that also might sway your opinion a little bit. Because you might say, well, that's true, Booksy. It's trading in the higher half, but it's also in the bottom of the previous one. So that could be supply. Yeah, I mean, it's something you got to think about. But you can use that and you can see like, all right, well, where are we spending more time? Well, most of this looks like reactions off the bottom. So that's either absorbing buying for the purpose of like distributing, which you can make that call, or it's just accumulation and you're not really distributing at all. And in this case, again, where is the volume concentrated? Mostly in these bottoms. So I think it looks pretty good. I think it's designed to look bad, and I'm gonna kind of cross my fingers that I'm not completely and totally wrong about it. Because if I'm like completely and totally wrong, then it's gonna drop pretty far. Probably drop down through to 450s. So but I mean, looking at it, most of the volumes here, there's a little high volume top Tuesday, but a lot of the volume is right there, and then a lot of the volume is right here. And you can see like this lower or this higher region in the middle, it's pretty sparse volume, and then this is all like really weak volume after it made that top. So when it came above 490, the volume looks kind of weak. Again, you might say, well, that's not good, right? Because you want buyers to be buying above that price. You want them to call it support. That's what you've been saying. Yes, but retail has very little buying power by comparison to a institution. And if an institution wants to accumulate or distribute, they're going to waste a lot of time because they don't want to advance the range too soon. They can't put bulk orders in without causing the stock to fly. So they have to think about it this way, and a lot of people think that supply and demand doesn't matter in the market, but I think that's nonsense. I still think that that's not the way the algorithms are built. They're built to take shares away from people or take shares away from shorts, like sell, you know what I mean? Like those positions they're meant to drive their own profits. They can't do that in theory without trading against somebody. So every buy is met with a sell and vice versa. That's the nature of the market. Whether or not that happens or if some of it's artificial or whatever, that's a whole nother topic, and it matters, but the way that the algorithms are built are specifically to get liquidity out of people's hands. So if you wanted to buy the stock and you wanted to accumulate, you can't just put multi-million-dollar orders in. That's just going to drive it to breakouts and then cause probably massive sell-offs, right? Instead, you want to wring out, as if you're wringing out a towel, right? Wring out the retail and drag out the range, and you can put in orders that kind of match. So you want to instigate selling here and there in order to get retail to give up their shares so you can buy. But you can't do it too fast or else you're going to cause the range to be gone. So the nature of a Wyckoffean analysis is just that, is that you're watching how an institution is trying to get people to give up their shares one way or the other. Whether they're aiming for a short dive, a drop in a distribution, so they're taking their shares and they're distributing them, or they're accumulating shares, as is the case of an accumulation, right? And they're getting those shares from retail. So when I look at stuff like this, I'm like, well, the fact that it doesn't have high volume on the top might seem bad, because it seems like there's a weakness above 489, but I don't ever expect there to be a strength on a new support that has been acting as resistance until you're in the SOS. So like the whole idea of a sign of strength is that you're turning that previous resistance now into support. So in a range build out, that top has been acting as resistance, resist, 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 resist. Once you flip, you're done, you've exhausted the range. If you're ready to advance, then you flip it to accumulation, or excuse me, you flip it to support. That's where you want to see the buy-in, which is why when I was talking about the spring breakdown, potential spring breakdown, I should say, on MPW, and we're still not quite sure yet what's going to happen here. It doesn't look great. I was talking about how like you really don't see a big buy-in until this point, which is like after it comes back above and retests these bottoms. You see it as weakness, and that's the design of it, is to kind of be fear-driven. You see it as weakness. You see it as it's failing. You see it as this or that. And sometimes, guys, it is. It's just like it is failing. You know, it's a failed attempt, or it's a distribution. You misread the range. You might not have it right, you know. But if you have it right, then that fear is driving the selling, and they're ultimately picking up last minute shares for liquidity. You don't see the buying until they're ready to kind of mark back up, and they'll just go right back up through the range, typically right back up through the middle, and then push out after a spring action, if it's a spring action. Okay. And if it's not a spring action, you may have just misread it. I may have misread it. And then there it could just be like a massive like hook, or it could be a LSPY with a bit of a UTAD at the end, because an LSPY is a range too. It's just a little range, you know. So I don't know. I'm kind of just waiting it out today and tomorrow. I think that it's going to be kind of a boring couple of days. I got to be honest with you. If we see something exciting, I would expect it to kind of set up today and then go tomorrow. But if we don't see anything really good set up today, and we get on tomorrow and it's kind of looking like it's in the same zone, I'm probably not going to be hoping for a lot, you know. And I'm not saying that, we just have to drive the price to max pain. I don't necessarily think that's the case. I think we might just camp out in these little zones that we drew. And we've been right so far about where it was going to go when it came down. And there you go. So there's a push. But it just hasn't really done much, right? You don't expect it to do much. So, all right. So the good news is GME looks like it's trying to push its creek. So it did have this move early up to about, 2477. So if you're going to be that guy that watches like the mini market, like where the ants trade, we are. We're the mini market down here, like this tiny little thing. It's not really much of a range, but if you're going to watch it, you'd be watching the jump here, some kind of a retest probably, and then ultimately breaking above 2477. You guys are like, I miss Ant's trade. Every time I say something, someone always says they miss somebody. I always feel really bad. I feel like a stepfather or something. Some of you guys are like, hey, I'm a stepfather. I have a great relationship with my kids. That's not what I meant. It was just a bad joke. But like, where they're like, I miss my real dad. And I'm like, ugh. Well, I'm not trying to replace them. Booksy, how in God's name will AMC run or have a melt up when GME is where it is and has no debt and over $4 billion in cash sitting on the sidelines? Well, I'll tell you how, which is look at the history of AMC and GME. You guys are like, what? That's a dumb answer. It's not a dumb answer, okay? There are such things as sympathy moves. But I want to say this, all right? So GME, I'm going to make it really simple if I can, okay? GME went down, it accumulated, and had a big push up, right? really low, has a spring action, and then jumps. This is the all-time, like we'll call it an all-time chart. It's not really all-time on GME, but you get the idea. Okay? Okay. That happened. Now, AMC did something really, really similar. All right? It went down, it had a new low, right? And then it did almost the same move back to the upside. But then this is what happens after the fact, all right? And I think this is where you get fundamental differences. So both of them start a distribution cycle. GME's distribution cycle just comes back basically to the early preliminary supports, like where supply was trying to drop, or at least preliminary supply, where they were trying to drop the stock, and they didn't do it, all right? We come back to like $10 or whatever it is on GME. AMC does something kind of similar. It actually came back down as well. But instead of holding on there, it drops. And it comes really low. And we know the rest. It just forms that shallow S-curve. Okay? So all of that's happening at the same time. And if you were looking at the primary actions here, you would be saying up is up, down is down. And not only that, but you could even go back and go so far as to say that, well, while this was happening, right, on GME, AMC actually had a second push, which was that June move. And GME never makes another high. It just kind of doubles up thrusts, basically. So if you're asking me the question, like, how in the world can they move together? That's how they move together. They do not have one-to-one moves. They move according to their own chart. And I think that this idea that AMC and GME are going to move in like a MOAS together is absurd. I don't actually believe, and I'm being genuinely serious. You don't have to believe me. I don't care. I'm not trying to be mean. I just mean that it's okay if you don't agree with me. I think GME has this very strong potential to make new all-time highs if it pushes again. Why? Because it's sitting on $4 billion in cash with basically no debt. Okay, that's why. I don't think AMC does. So when this thing goes up and it pushes above all-time highs, and it probably will, in my opinion, do that, you know, what is AMC going to do? I think AMC is going to push up, and you can see it now. You can see it in the current price action, you know, but AMC pushes up, and I think it's going to have like multiple up thrusts that basically just eventually get you back. And in this case, I'm kind of skewing it because really it's down here. It's testing previous bottoms, y'all. It's not testing even the tops now. It's in completely the opposite place as GME. So do you see the difference in these two charts? Like, they're both moving at the same time. They're both having massive moves. One of them's going up and trying to get near the all-time highs. The other one, it's just trying to get back above the previous lows. So I don't think it's that complicated. I think that what you're seeing is you're going to see a build out on AMC that basically just breaks the first creek. This is what I believe is going to happen, okay? I think you're going to see a build out on AMC. I think this is probably going to test that $15 to $18 area. This is going to be a wall. We're probably going to see a lot of people sell off there. I think we're going to come back down. I don't know if it's going to go to a new low here or what. Okay, I'm not really positive, but I think you're going to come back down to check the creek. Maybe it comes down all the way to the bottom. I don't know. And I think the ultimate goal is for AMC is to come back up and test this. I don't think it's that complicated, and I don't think that we're going to really need to worry about it until we get there. But I think that's kind of like what you're talking about. While GME, I don't know for a fact this is going to happen, but I think GME might be in a situation where that M cross is high. And then ultimately, yeah, you could have a really big push that looks like something pretty spectacular. Both of them have the exact same movement in terms of up and down. If you're just looking at it in a binary method, they have completely different movement when it comes to what's actually happening, right, with that stock. So I don't feel like it's that complicated of a question at all. I don't think it's difficult to see it. So for me, I'm like, I don't know, it doesn't seem complicated. the idea that people out there, that unfortunately I think that a lot of folks are, I don't want to say delusional, because it could always go the way that they think it's going to go. But I find it to be a bit delusional. This idea that AMC does this and just keeps going and goes from here all the way back up to like $1,000 or something. That's not really right. And if you look at the overall setup, this takes a long time to build out. And yeah, like GME might be advancing when that happens. We don't know exactly what's going to happen, but I don't see that as unusual. I see this as, this has a lot more sellers in it. This has a lot more shorts in it. This had a reverse split. This had the ape thing. This has debt. This has problems. And it needs to do a lot more to get back to the upside. And then what, Booksy? Well, then probably we're going to have to come back down again, you know? I mean, there's going to be so much stuff that needs to happen here. I just don't find it to be that unbelievable. So I'm not trying to be a jerk or anything. I'm just explaining it with trying to explain it with like a sense of passion, I guess. So I'm not trying to be mean, if that sounds mean or condescending. I just think it's a matter of like, you can have the same quote unquote algorithmic moves with a lot less volume and with differences in volume. It doesn't have to be some fractal flipping nonsense like people tell you. That's not, I don't think that's a thing. I think it's just a matter of like, oh, there's more selling than buying, period. So did we make the jump? Yes. Did we make a new low here? No. So that's good for now. So we could be in a situation where we come up and make a phase B top. Don't really want to see it advance beyond 26.17 until it's kind of ready to go. GME looks pretty good though. And I'm not really seeing anything particularly bad about this or anything. From a wave perspective, I think it's pretty much done. We might have one higher move up if it goes to the next wave, to the next creek. But it pretty much hit that on the mark. So maybe it goes higher. I don't know. But it doesn't have to. Does that make sense? It's kind of like, if I were looking for a jump here, that's kind of what I'd be looking for. And then AMC pushed up to 494. That's pretty much where we thought it would go if it pushed back up. So looking like pretty close to what we drew out a minute ago on the build out. I'm really not just talking to hear my own voice. I'm really trying my best to give you the details that I think matter. So let's check this bottom really quick. Just kind of making sure before we move on. It looks the same. It looks like we got a higher low. It looks like it hit 472. And yep, so it never went back below that bottom. So it's looking good. So good high volume bottom right there. This is, again, one of those things where we probably could flip back and forth like all day and just check on it. But I think that it's pretty straightforward. For the most part, this would be the breakout of whatever perceived wedge we had going on here, which I didn't really even draw it right. I just kind of drew it like this. It should be over here, I think, like that. And that's kind of the wedging action locally. So you might expect there to be, using kind of the poor man's breakout method, maybe a push up to 550, this previous top. But when you have a throwback, a lot of times it affects the price. And I always think that like if it basically goes all the way back to where it started, you kind of reset it. So I would say on this M cross, if it works itself out, we're probably going to see a move back up to 533. That makes sense to me because that's where the next creek is, up here. And I don't think we're necessarily going to get there today. I'm just saying. This area seems like a pretty logical target region. So at least initially for that breakout. So if you went across here and then pushed up, I know I've got it going like straight up, but I think it'd be reasonable to expect it to go to like 530 again. And that's been an area of contention, so it makes sense again for a lot of reasons that you might do that. The good news is that could be a creek test or a creek push here. And then if we break it, I think that's where we might get our phase B. So I'm still going to be under the assumption that this doesn't run, but until Monday, I think it's possible it runs tomorrow. I'm just playing it cool, I guess. I don't want to like assume we're going to get a nice Friday move. If we did run tomorrow, it might be good to go ahead and get up to like halfway, and then we could have a continuation Monday and a reversal on Tuesday, which is usually what happens. So if you go up on a Friday, you get a little bit of the FOMO action on the Monday. So maybe last minute Friday we push up to like 5:30 and then, or $5 even, and then break out again Monday. And that could get us sort of a slingshot move to the 570 mark. So I'm just looking at where we are on this support. So I thought 572. So if you go from 481 up to 572, the middle is 525. So let's do that. It's tricky. That should be the exit trajectory. It looks like it go higher than that to me. But maybe it goes lower. Maybe there's a spring. Maybe this is a phase B top and then you still have to come down for a spring. And that's the 467. That's possible. It's still not below our marker. It's still good. I'm going to kind of lighten these up a bit. Get rid of some. Yeah, so not all moves result in the biggest move. We just wanted to see the creek jump, and we did. So here we're looking for some kind of support. I think I said 2477, and it looks like right here it broke 2477. You see the little rejection on the 3-minute. So we could come back pretty deep for a retrace, but there's a kind of an underlying midline, if you will, at like 24, maybe 85. 2485. So we could find a temporary support there. And we've already pulled back pretty close to it. That was 2493. Well, I appreciate that, Shaw, but don't lift people up on a pedestal, you know? Like, everybody's got problems. I wish I had, like, you know, no problems. I wish I had no regrets. That's not the case. But I do want to do this for education and yeah, I mean, I'm trying to make money, so it's not like I'm making money off of you guys. That doesn't interest me. But I do want to make money in the stocks, so it's not like, at the end of the day, this isn't like I mean, it's sort of a charity, but it's not, you know? It's not at the same time. It's just more of like the time I'm giving, I guess, as opposed to anything else. The targets that we get have been really good lately, but it's mostly just because we've been in a range. I mean, when you're in a range, it's easy. I wouldn't say it's mostly. We're working hard, but like, that's like downplaying myself. But when you're in a range and you look at the crosses, it's a lot easier to kind of find the targets. When you're not in a range, sometimes it can be very, very difficult because you have to look at the big, big picture. And that's where things get tricky, you know? And that's why I think on the big picture, this is what I'm looking for AMC, is that return back to like 90 or 100. But I still don't think it happens for a while. I think it could be near 2026. I think at least a year, but I know that kind of discourages folks. We'll get some big moves before then. It's not like there's not going to be any upside moves. I think we'll get a few big moves, but I think a lot of it's going to be retracement and supports, because as you can see, like when AMC's bottoming, you get these big moves, but it also has deep retracements. And that's the expectation we have on the micro. There's no reason that we shouldn't expect that on the macro. And like we did. If you look at the 2020 build out on AMC, it's very much an accumulation, but it takes a long time. It's like 10 months, and there's a lot of time spent in the tops there where it looks like it's going to break out and it doesn't break out, and then it drops all the way back down to the bottoms, and you're like, oh my goodness, you know. So I'm trying to temper my expectations for AMC. I think that we're going to get one more big top, right, for now. I really don't think it's going to go beyond there for now. But I think we're building out, and all this stuff that people are kind of thinking about longer term in terms of a bottom, I don't know if that happens, but I don't know if it needs to happen now. And that's kind of the bigger thing, is like there's folks out there who, I'm not going to name any names. You already know who's kind of bearish and bullish, but the folks out there who are kind of bearish, who are looking for those lows, they might be right. And it's kind of like when you're out here and locally people are saying, well, Booksy, don't you think it needs to go down to this first? And I just don't think it does. I mean, in a good range, if it works out, yeah, you might get down there at some point, but really like coming up high and then coming all the way back down makes a lot more sense for the larger range build out in this particular case. Unless I've just misread it, because I asked the question, is this the phase B top? I don't really think it is, but at the same time, when I went back and I looked at, and we did this examination a couple times already. When I went back and looked at May, it's very similar. It doesn't really have a strong phase B top. It's basically just like a one-off up thrust. The difference between the two is that this seems to have not broken out of the uptrend, and that was kind of my big gripe, was like, well, I mean, on a small scale, you shouldn't even really be able to use Wyckoff, though it does sometimes happen to work out. But on a bigger scale, like this doesn't really look like it broke the trend at all. I mean, it broke this tiny trend. So this could just be like a finishing action, a distributive top on the automatic reaction, and that's where things get kind of dicey, because I'm like, I don't know. So I don't know. There's nothing I can do about that. So I think that on the whole, there's a decent chance this has a run up. If it doesn't go all the way to 570, I think it at least goes to 530 locally, and then we'll see. I think there's a decent chance this runs up past 570 if it can bottom here. And I think we're going to get a decent move on GME as well. The rest of it, though, that's the question of, and I've got all kinds of garbledy-gook. That's my favorite word right now, if you haven't noticed. But remember when we came in here and I was saying that, like, I think I wrote it on GME. Maybe it's on the other chart. But I thought I wrote it down on a chart, and I said that this would be a great place to build out. Oh, I did write it on here. This would be a great place to build out a floor, because the sideways trading that's happening right now is very much like in sync with the sideways trading we happen to have on the 10th, which was like that first bottom. And so this would be a really great place to build out like a liquidity floor. If you're going to have a spring later, then you would have a place to kind of return to after that move. So the same would apply for AMC, like building out a liquidity floor here would be wise, and then driving the price up and then maybe coming back down later. I could see it. I mean, it looks pretty clear to me that that would be a strong possibility. And then that's where the debate comes in of like, well, do you actually think that this couldn't be a bottom. I don't know. I mean, things are not always what they seem. With Wyckoff, you have a specific set of, they call them schematics. And if you go to like Wyckoff 2.0, which is like the modern, it's like people taking Wyckoff to the next level basically. And if you go to there and you look through their stuff, and even in that, there's so many diagrams out there. They don't all look the same, you know. They're all very, very dynamic and different. The big picture of them is the same, which is you have a accumulation or you have a distribution, and maybe it's a reaccumulation, maybe it's a redistribution. Those kinds of things end up basically all being like categorically the same. Like, there's not really that many differences. There's only like 4 different setups, but those setups can play out in so many different ways. So people have taken it to the next level and really looked at, well, here's what happens in like this kind of ascending accumulation or a descending accumulation or a giant W looking bottom or this or that, an inverted head and shoulder bottom, or, you know, a triple top or a head and shoulder top. And how does that look in Wyckoff terms? And they don't look like, I mean, if you just looked at them, you wouldn't say, yeah, that's a normal accumulation or a normal distribution. So the normal accumulation and normal distribution are just the cat ears that I talk about all the time. It's this guy, you know what I mean? And usually there's a little up thrust at the end, and that's it. I mean, it's kind of straightforward, you know. Maybe this goes too high for a UT or something, but whatever. I mean, so that's it. And then you look at it on the bottom, and that's where people talk about the George W. bottom or whatever. It's the same thing. You know, so like I look at this and I'm like, yeah, and then you could have a spring here locally, or it's this exact same thing. It's just upside down, basically. But those don't always happen. Like it's not always that perfect. So the question I have really wouldn't be, is this good? If it comes back to 570, I'm going to be like, yeah, if it stops there and then backs up, it's probably good. I would be very happy with that. What happens after that is the same as what I drew out on GME. It's kind of anybody's guess, because it could be that this was just a simple bottoming action. It's not going to do any kind of spring. This just teasing out people to think that it's going to go low, and then it doesn't. But we won't know until up here anyways. Like, we wouldn't know unless it advanced into an SOS. There's just no way to know. You can guess based on past price action, but there's no indication that past price action has to be the same as the future price action. So every setup is its own setup. Right now, I think that there's a decent chance for both of these that target that we had earlier, the 35, that was a little bit higher for GME. The fact that we didn't come back up and hit that outer creek makes me wonder. You know, I've been kind of question marking that. We never made a higher high on GME. So this still, to me, looks like it could just be an auto reaction with, frankly, like a retracement. There's nothing here that makes me feel like it's over, but I guess it could be. I mean, I guess it could just be a bottom and then it just goes, makes a higher low and then just goes. That's not really a Wyckoff setup in that way. We could play it out that way. I could find you a schematic. You know, there's always a schematic that fits it. But off the top of my head, if it went up to, I don't know, 34 next week, and then on Tuesday came back, and Wednesday it built back up again, and then it rockets back up to the top, I'm like, okay, we're going. You know, this idea of like a build out for a range makes sense because of where things are being placed. And right now, it looks really healthy as long as we don't make another low just yet. Whereas if we were to sort of distribute right now, maybe if we pop up too high and then start selling off all the way back through the range, the local range I'm talking about, that could be different. I mean, that's a different kind of setup. Then you have maybe a problem. So it makes sense to me to go ahead and do the advancement for bullish sake. I think it would be wise if we want this to be bullish to kind of I don't want to say advocate, like we can. It's such a weird thing because it's like you're saying like, Booksy, that's what you want, but you have no control over that. So what am I supposed to do about it? I don't know. You can't do anything about it. I was saying advocate, but like, who cares? You could be like, no, this is what we want to have happen. Well, that doesn't do any. It's like, throwing dust into the wind. It's just nothing happens. Just talking about it. But that's what I would like to see. And that, in terms of my future investment, if I saw that, I would have a much more confident answer for how this range finishes. That's all I could say about that. And same goes for AMC. Like, I would feel much more confident about this range if it goes up from here and doesn't make another low and then proceeds to build out, whatever. But the main question I was asking was like, well, what happens on the top? I don't really care. Like, this could go on for another week and I wouldn't be like super upset by it. I think that at the end of the day, like, this is either LPS or spring at the end. And so if it's bullish, it is. If it's bearish, it could just be a bear flag and then it just drops. But if it's bullish, I think you could see this. I kind of don't know if it's going to do a spring. I don't know. A lot of people are talking about it. Maybe it will. But if it happened, maybe this is where it happens. Then you see it find support again on 494, and then it just takes off to the upside. Happy 4th of July or whatever, right? Because we have a Thursday that's off as well. So another 4-day week coming up soon. I don't know. I could see that as a possibility. I could also see this as a possibility, just like not achieving the spring and just taking off. Or this, where it doesn't even come back down very low at all and just takes off. Ideally, I think we're going to bounce off 494. That's kind of my only... That's kind of my only thought about, like, where do I want to go? I want to see it hit 494 with support at some point. Maybe that happens on the way out here and then we don't come back, So that makes sense right there. This could be a problem area. If we do just rocket through it Monday, you've got this kind of huge space. Maybe that's where you go down and get the 430. But see, like, that's what I'm trying to say. Like, I don't think people are necessarily wrong about 430. I've been looking at it and I'm like, yeah, it makes sense. I just think that the way that the range is built out here doesn't really warrant dropping now. I'd rather it drop later. So that's all I'm trying to say is, like, I'm not really against the idea. It's more of just when it happens, because this makes sense to me to, like, see it build out high and then come back down, because then you could build out a spring right underneath the floor and then just go, maybe that Monday the 8th. That makes a lot of sense to me, actually, because then they would leave this gap open on this, like, massive downward creek here. There's a lot of push down here. Someone else will look at this and read it like, oh, it's an SOS with a big old backup, but I think that it just depends on what size of the range you're looking at. I could see this, though, as a very, very possible outcome now that I'm staring at it. I've done this like every single day, and every day it's like, there's like different outcomes every day, Booksy. Well, because the range doesn't do what I want it to do, it's not like I can make it play out a certain way. I'm just trying to look and see, like, how could this achieve a bullish outcome? This is one way, this is another way. And either way is fine. Like, either one works for me. I actually think this probably come back down pretty far. So AMC likes its deep retracements. It's silly like that. Very rarely do we get like a 50% retracement on AMC. It's always like 786 or 854. And that's different than GME, you know? GME has like a different build out. So AMC is sitting at 486. It's at 0%. GME is at 2485. It's at 0.7%. It's not really that different. If you go back and you look at the GME price action, it's essentially just sitting again on that top 50%. We were talking about it earlier, like it's trading more on the top area here, which is fine. And there's heavier volumes on the bottoms. That's usually a good sign. So all that's really required here is some kind of a support, maybe a higher low, but I don't think that it has to be here in the middle. We could go back down for this lower creek hit, 24.27, come back up. I mean, like I said, this could take the rest of the week. We don't really know. So it could just be sideways today. But if it were to go up, let's say today, I would expect it to advance to the top and SOS at like 26.30. So something like this over the course of the next couple of days would be bullish. Don't know how long it takes. Just throwing it out there that those are the levels I'd look for. It could be, and this was the scenario I was talking about on AMC, there could be a situation where you drive the price low here if you need the liquidity. But I kind of like the way it is now. I hope they don't do that. I can't control that. But I guess if you wanted to drive the price low, now would be the time. You can't do it later. You can't do it like after you advance up again. That's not going to work. So this is kind of the window of opportunity for maybe a quasi spring action, if you want to call it that. It's not quite. Maybe a double bottom or something. You go back down and check the creek. Maybe you make a slightly lower low. Chest liquidity. Trying to think about how this might break down. Hey. Well, that doesn't sound good. All right. When should I be trying to enter calls on AMC? Well, all right. So you know I have what I have to say, and I hate to say it, but I have to say it because legally, you know, I'm not allowed to give you financial advice. The concept of that is kind of stupid because if you think about it, like we get financial advice from all kinds of people when we either take it or we don't. And I don't fully understand it. Maybe because I'm like, well, what if your parent gives you financial advice and it's bad? Can you like sue your parents? Like, I don't know. People might do that. You're not a financial advisor. You can't advise your own children. I don't think people would do that. But I think that that's sort of the vibe that I get when people say that. I'm like, I don't know, man. People give people advice all the time. I think the reason is because you're publicly coming out and you're saying something that could be misleading. and like cause people to lose money or cause them to make poor decisions. And if you advocate for yourself as a financial advisor and you're not one, then you're misrepresenting a profession. And I think that's the idea. So I am not a financial advisor. So you need to know that. I'm not licensed financial advisor. Okay. When would I get calls on AMC? It depends on what your goal is. If your goal is, I want to make short term, I want to make a few $100 or $1,000 or whatever you're putting into it. I want to make some money on a play to the upside here. If I think this is going to happen, how would I do that? Well, I'll tell you this much. Almost every time, okay, that AMC builds out a range or GME builds out a range or whatever, like from A to B, just so you know about options if you're not super familiar with them, but the volatility will hike. What you might not know is that volatility usually continues to hike through the second action. So it's usually like a volatility hike through here. So if in this first action, you might get a volatility hike all the way up through all this business until you hit like near this bottom. Once the retracement's done, it might be a little before then. Once the retracement's done, volatility tends to sort of drop off a cliff. And from the time that this starts leveling to the end, you typically have very little in the way of, we call it volatility, okay? Implied volatility. So what happens with your options contracts is twofold. So like number one, they're losing on that IV, right? And if you entered too early, for example, into a put back here, you might even lose money on a put, even though eventually this thing drops down because you're getting eaten up by what's called theta, which is time decay as you get closer to whatever strike it is. And the volatility is dropped. And usually what you see is the bid and the ask kind of settle out, but it's usually after like a pretty significant shakeout. So that's not always the case. It just depends. Bigger moves, the volatility might stay hiked for quite a while. In the big move that we had, it was fairly high. I mean, the contracts were all pretty expensive all the way through. And I'm looking at GME, but an AMC, they were expensive all the way through this area. I mean, they were way up there. So this is really what squashed it, was this downward move back in May. And that brought all the call prices down. Now, at that point, if you had entered calls, would you have made good money on these push-ups? Yes. So the question is, like, where do I need to enter if you're bullish? You don't really need to enter early unless you're doing something like leaps. Leaps are a little different. So what a leap is like, people define it differently. I think about like 6 months to like 2 years out, but usually on average it's about a year or so. I mean, you're talking about a long-term contract. They don't get impacted as much by theta decay. So when you're watching the price go sideways, your contracts might just sit still if volatility is the same. They don't really decay. So it really just depends on what and there's other stuff. I'm not even talking about all the other Greeks. You have to look them up. There's a lot of things that play into it. Delta is really, really important. Delta versus theta ratio is really important. So make sure you understand that. But I would say this is like, when you're watching this price action, a person who entered a call option back here probably lost money first, and then they probably didn't really see a lot of gain until maybe after this move. Like, it probably kind of rebounded on their move, and then it may have even come all, I don't know for a fact, but it may have even come all the way back to like essentially where it was before. You know what I mean? And maybe even lower. You might still be losing money if you entered way back here, even though the price is up. I don't know. I wasn't watching. I can't go back. I can go back. I guess I could find the data about it, but that's typically how it is, because the squash usually ends up kind of staying squashed until the breakout. So really, like, the only time that's a great time to enter call option is like right before a breakout. And the same with put options, is like right before a breakout. So if you're doing anything short term, that tends to be the best. So it just depends. You know, if I were playing options here and I was doing short-term options back on, let's say May 24th, yeah, you can hold those options all the way through. Let's say you got $50 strikes and you were
they were for, a few weeks out, mid-June, maybe a month out, you could have held them all the way through June 7th. You would have made good money. But I would venture that if you had exited the play on the first push-up, like right here, and then like re-entered again right here, you probably would have made more money. Because I'm betting that there's not a lot happened in that first push. They might have elevated a bit and then come back down, but you really would have made probably more had you exited and re-entered. So if you're just playing, I'm going to buy and sell contracts short term, I think the best strategy, this is my strategy, it's not your strategy. You decide what's best for you. I think if you're doing short term, it's really best just to play the swing and then don't worry about the rest. There's always going to be an opportunity to enter again if it breaks out again and you get confirmation. So if you're looking for longs, this is a great time to get like leaps because we've been kind of sitting low. Prices have come down a lot. They're dead. They look dead. Contracts are really low and cheap for the most part. So a great opportunity to get leaps. But if I'm just playing like short term, you're kind of waiting for the breakout and you don't really need to necessarily gamble on it. You can just wait. This is not going to change. The price isn't going to change much. You might get a few cents off the contract. GME is different. GMEs are expensive. They're like, all of them are high. They swing between like $4 and $1 regularly. I mean, they're super all over the place. AMC is a little different. They tend to be pretty cheap. So, and I don't really find that the entry to matter if I get in early. It usually doesn't really help me. So, frankly, like it might be hard to be patient, but sometimes doing nothing is better because you're not buying into a theta decay situation where, oh, I bought and now the price is chopping and my calls are losing money. And that's the difference between shares and options. Options might seem like, oh, I can just buy it and hold it, and then when it goes up, I'll make money. No, that's not necessarily the case. So if you're looking for like leaps, like long-term contracts, this is fine. Volatility is, fine. It's not, it's not the lowest it's ever been. It's not the highest it's ever been. You could average in prices here, at least as far as what I'm seeing. I'm looking at some specific strikes and stuff, so it might change based on what you're looking at. I'm in the middle of a thing. You just got home. What's up? Okay, just a minute, folks. Okay, so I guess what I'm saying is that it just depends on your goals. There's a lot more you could say about options. I'm keeping it very, very, very simple. You need to make sure if you're not, and you may be very comfortable. You might just be asking for when do I think is a good time to get into option contracts. You may know a lot about them and just want to know like specifically for this stock. But for those that don't know, if you do play options, please look up and understand the Greek symbols because they really matter, and you can lose a lot of money being a little bit too headstrong with them. They tend to get kind of eaten up, Now, IV charts, there are some indicators that you can use. I don't hate them. It's not like they're bad. You can get like an applied volatility indicator, but the thing is it depends on what time frame you're looking at, and that sounds weird. So I find it to be a bit so-so. Like, is it a good indication of really what the volatility being, at a good place or not? Well, long term, I think it just depends on what's your time frame. So there's one that I was using. and I think it's okay. There's an implied volatility suite, and you can change the settings on it. I mean, it's kind of easy to see, like, oh, volatility hiked and then it dropped. But I mean, it's basically just moving with the price. But you can see how flat it is. So in like the course of this, and I'm on a 10-minute chart. And this isn't even the IV, I think. This is something else. But like, I'd have to look at the settings. But you can see like how really buying here and buying here is like no different, even though in some ways the price is better here. It's actually, the volatility is lower. It's being squashed, you know. So like I would look at this and then I would go to the settings if I can. I always forget how to do this on here. Oh no, it's not showing me the little settings thing. That bugs me. There we go. So this is IV rank. So you can use the VIX, but then I would go down here and change this to implied volatility. That's the volatility data. And you can change the expiry and all this other stuff. So all this stuff might impact. I don't think it's the best indicator in the world, but maybe there's better ones. But this one's okay. So yeah. Like I was saying, like, is this a good time to look at longer term contracts? Yeah, it's pretty much if you had the same as if you had bought back here, you know, in terms of that. And I think that's probably accurate. But if you had bought when you first dropped down, you would still be like losing money if you had bought leaps back here. Shoot, if you had bought leaps at 438 when it first dropped down, like the volatility was still high, like very high. So even if the price is similar in price, you're not even that far off from that. You're losing money. It's actually up from there. That's pretty standard for options. So yeah, you know, I'm looking at MACD right here and I'm like, that's kind of winding up quite a bit, isn't it? Looks like it's getting ready for a big move. Just reminds me of like a little bit of a wedging action. Nothing too crazy. A little bit. If I sold $40 cover calls on GME and it hits the strike, do I lose money? Probably. Especially if they're covered, because they could exercise if it hits 40. And then you'd have to give them right? You have to deliver the shares. Beyond the strike. There you go. Yeah, you just got to be careful with that kind of stuff. I don't think you're going to have a problem till maybe this runs up, but I don't do like covered calls, so I would be not an expert on it. There's a lot of good material out there, though. And love him or hate him, that guy Colin Gladman or whatever his name was, he does a lot of that stuff, so he might be a person to ask. You can always ask our group if you happen to be in the Discord group. You can ask that group because a lot of people do that. So. Well, yeah, he knows what he's doing with that. He made a lot. I would say made a fortune. I don't know for a fact how much he makes, but like he made a lot of money doing cover calls. That's kind of his sort of deal. And there's a lot of people that do that, so you can look it up. But I think that Probably just looking it up on Google will give you a good answer too, frankly. You guys are like, well, guess that's it for the day. I was asked questions about options, so I'm answering those questions. If you don't play options, it's totally cool. There's no judgment. Options don't really affect, they do affect the price of the stock. I won't say they don't affect it, but they affect it in different ways. I do think the options chain is super, super important in terms of like, what we saw recently was like an OPEX tailwind. I think that's a real thing. I think it does have a great impact. But if you're just buying and selling contracts and you're not really ever executing it, you know, are you really putting price pressure on the stock? It's almost like subliminal. But I think, yeah, you might be, but it's not like the way that people think it is. So it doesn't affect something like a short squeeze. Not really. It's better to have and hold shares if you want to have a short squeeze. That, because options really don't affect it. The idea of a short squeeze specifically. That's the weird thing about the market, is that, especially with these stocks, is we're always kind of, especially GME, good grief, it always has like an elevated short interest. It's always at like 20 or 30%. That's not a unusual thing for GME at this point, but the last move wasn't much of a short squeeze, which is kind of interesting. You would think it would be. I'm sure that shorts were squeezed out, but it wasn't like the driving factor is what I mean. So, because the short interest stayed like pretty high throughout. I don't know. And then you got that that company crying and taking their ball home because they didn't like that GME had bulls in it. Like, that's the most silly thing I ever heard. That was so funny. Like, that company getting out and saying that, like, how dare retail, you know what I mean? Like, retail is just delusional. Like, I don't even know. Like, what are you trying to accomplish by saying that? So strange. I can't get over that. Their comments were just so dumb. Like, I don't even have it's like I can't register and understand why a professional hedge fund or whatever would say that. Maybe because retail is so used to just kind of being at the whims of the market, and a hedge fund thinks that they control the market, and so their arrogance is that they believe that they have like superior knowledge and that they should just do what they think it should do. They're like, you're dumb. Don't you understand this isn't valuable? It's like, no, you don't get to decide whether people what they think is or isn't valuable. Retail is used to that because we're used to like not having the ability to decide what this does. You know? I don't get it. Nothing but hubris. I just don't understand it. I was thinking about it and I was like, I just can't understand that line of thinking. Like, for someone who's supposedly like professional stock market traders to come out and say this is just some cult, you know what I mean? Like, what? Do you not know how the markets are supposed to work? I don't know. Maybe it's because it's one of those things like where it reminds me of something that I've heard before, but I can't quite put my finger on it. Like somebody, minimizing like the opposing side because they actually got it wrong. You know? I don't know. So you just like minimize and downplay what everyone else is saying. Try to make other people feel like it's like what a bully does, basically, an emotional manipulation. I was wrong, but really you're wrong. Really, let me tell you how you're wrong about this. It's like, okay. A hedge fund with a personality disorder, basically. I just don't, yeah, I mean, it's so strange to me. I can't put my finger on it. Yeah, maybe that's what it is just seems immature, but it's not, it's like a corporation. It's not like a person. It's specifically. Yeah. All right. I'll stop talking about them. I was talking about Citron, if you guys don't know what I'm talking about. Apparently they left the GME play. And I don't know if they really said we'll be back at 45 or something, but they really said that. That's also really strange. That's almost like they're giving you, like, could that be a bluff? Like, what does that even mean? Are they giving us a price target? For a hedge fund to say, like, I'll be back when it hits $50, doesn't that make you seem like, wait, you think it's going to hit $50? That's what you're telling me? So I should buy in more? Is that what you're telling me? Are you telling me that it's going to go back up again? I just don't get it. Are you just telling me that you're going to keep it range bound? You think it's not going to exceed that price? Why are you telling me this? Why would you say that? That doesn't make any sense. Could you imagine if they were like, we'll be back when it hits $130? What would that make you think? What? So you guys think it's going to hit $130 now? And you're against it? Why don't you just buy the stock? And then it gives me a price target that I'm like, okay, well, apparently this guy who's short, or is that like them bluffing, like trying to make people think it's going to go up and they're going to drive the price down? That's a really weird way to bluff. Sneaky. Am I wrong about that? Did they actually say that? Because somebody we're dropping them with quotes in here, dropping what they were saying. Is that really what they said? If you can tell me, that'd be great, because I have no idea what they actually said. But if they really said that, that's weird. Yeah, that's what I'm saying. Titleist guy. That's what I thought they said, and I was like, what? What does that even mean? Are you giving me a price target? Well, the weird thing is, too, is like, I don't know, because at the same time, I'm like, well, maybe it's just obvious, because if it's going to be bullish, it's going to head back here first. So what they're trying to say is they would stop an advancement. They would enter when it and comes back above, because they don't think it's going to go any higher. They think it's going to be like a distribution. But I don't know. Either way, it's like, okay, that's a big gain for me as a little guy. I'll take 100% move. I don't know. Like, I don't know. Strange. Did you buy them before the arcade stream? You mean this thing? Was that it? Right back here, or was it over here? I can't remember now. Or was it right here? When was that? It was the 12th, right? No, it was over here. Wait, where was it? I don't know. I already forgot. He didn't drop the price, but yes, it was used as a sort of a catalyst event. Maybe it was back here on the 7th. It was used as a catalyst event to drive the price down. It was already in a mode of uncertainty, though. So I shouldn't have second-guessed myself on it. I keep looking back at that like, why did I do that? Did I really think that that was going to happen any other way? Because it had went up really, remember it went really high pre-market after hours, and then it came back down. And I actually was really, I was wise until I wasn't, right? That's how it goes. I was wise about it. I got out of my options here, and I was like, I'm not going to ride it anymore. I don't think it's going to go up again. And then I was like, not smart. So I was like, well, maybe it's going to go up again. You know, you shouldn't just flip-flop like that, especially with options. You get chewed up, spit out. The technical setup already was set up to break down, so in retrospect, my folly was just being second-guessing myself about it. I shouldn't have second-guessed myself. But the technical setup was already there, in my opinion. I don't feel like he did anything. I think they were setting up for that beforehand. Institutions, that is. Oh yeah. So this is a really good angle here. We got to keep this one on the chart. I keep going back to this chart and I'm looking at it over and over again. So what this would be is, it's kind of like a 50% cross. I don't do a lot of pitchfork kind of stuff, but I'm reminded of the pitchfork whenever I see stuff like this, because I think about how in a pitchfork, it can, depending on how you set it up, define like a range, future range. Let me see if I can find one. Where's the pitchfork? Sure, I'll use this one. So like, it can define like a specific kind of range. Again, I don't really think this is like a tool that has to be used all the time. You know, it's not like one of my favorites, but I think it's a good one. And it can be really good for, you can see how nice those drops are. The up thrusts are all hitting like the middle of that pitchfork. So if you kind of map it out to the top one, and look at that, it's on that angle. It's kind of interesting. Maybe we should use pitchforks more. Yeah, maybe we should use them more. This looks pretty good. I put it on the creek cross there. That looks pretty nice. But it would also kind of imply that we should be leaving. I don't know what you would do with the rest of this. That you're kind of out of the pitchfork. Anyways, you get the point. I don't know. The angle here is questionable, but actually it looks pretty good. Like perfect. Bloop, 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 bloop. And actually it goes right into that, it kind of goes right into that cat ear corner. Uh-oh. Hey, will you help her? Will you help her? Yeah. She got her little spring toy caught in the metal. She's going to yank it down. Will you just unwind it for her? Thank you. Yeah, I wonder. Probably another way to do the pitch would be here and ignoring the top. That might give you a different indication of, I don't know. You get the idea. I'm not very good with pitchforks. There it is. I think the way you're supposed to do it is, I think you're supposed to go like that. And then if you get a, like for an upside move on a retracement, and then if it breaks down, it loses it. And then I think for downside, it's like the opposite. So you would go to these guys here. My thing with the pitchfork, I don't know if I'm getting it wrong, is I always tend to do it with a, the angle being wrong. Like I want to use, because like that could be really cool, because then it'd show you, hey, look, there's where the creek is supposed to be, over here. But I already kind of knew that. We drew the creek. I always think like I got the wrong angle. Like, shouldn't it be going with the flow? Then where's it going to? Like, I don't know. I need to look up pitchfork videos. Maybe it's this. Maybe you're supposed to do it to like the breakdown. That actually looks pretty nice. Sure. Take that. I mean, it works out. You get this kind of middle of the road. It's what I'm doing anyways, which is like you're looking at a 50, like kind of like a 50%. Like, oh, this is the way this sets up, and then you've got like a channel that goes down the middle here, and that's where it's going to be like settling, I guess. I don't know. This is just one of those things that you can do. I think it works pretty well with the stuff that we do. I don't use a lot of the other tools with the pitchfork, but I do think they're probably useful. I should use them more. And then I do use, I know we're kind of going off on a tangent here, but I use the Gambox sometimes. I like that one. I don't really use a lot of the other GAN tools. There's a lot of them. Those ones, like the fan and stuff, I'd rather just use like a Fibonacci. So, speed resistance. It's the same, almost the same as the pitchfork drop, right? But what I like about this, and I like about these ones, you can use them in conjunction with what we call like those creeks, right? So if I use like the 50% on this chop down, which is like the halfway point, this tends to work pretty well. You could use a pitch fan. What a pitch fan does is it gives you the same things, but it also gives you the pitch. So, yeah, this kind of implies, where you would go back to and potential levels where it could hit supports and resistances and stuff. Pretty much right on the money with these particular crosses. Almost doesn't really matter. My guess is that the smaller ones are not quite as important as the bigger ones. It's just mathematical stuff. Yeah. I don't know. Every now and then I do this kind of stuff just for fun, just to see what I'm missing. See if I'm missing something. That's pretty nice right there. So this kind of implies that the 50% is actually where we chopped and dropped from. And I'm not picking off the top here. I'm just kind of dragging through, but it's this sort of middle area, which makes sense that would be the case. We saw this marker as a whip around, remember? And it just came back up. So what that would tell me is if it broke out later, no matter where that may happen. So this is like in the case of a spring, right? You come down to these like deeper extensions. And then you can see like why that, actually kind of looks right just the way I drew it, just so happens. But this gives you like the extension downward to these like, I think these are the 1.8, the 1 somethings, like 1.5, 1.75. Yeah. So it's kind of going farther. I just make it all the same color now because I just got tired of like rainbow effects on those. But yeah, it makes sense to me that you would come back to potentially the middle and then maybe the top. So it's kind of a mess. It's sort of a cluster here, but you have a a decent chance that those are met at some point if the price does advance. So, sure. There you go, right there. Go to 1887. You guys are like, it's true. You drew a line. That's not how it works. But really, like, what I typically look for if I'm doing something like this is, does the 50% marker make sense as like a waveform? And did I get it right? I think it's a pretty close one. So I would say it looks close. And it looks like the 50% marker leads you up to like the 7s area, which is a number that a lot of people are getting. It makes sense too because it's a previous, when we came down, it was where the supply, really it's a preliminary support area, but it's where the supply kind of dropped it at 7. So sure, works. We don't usually see this top advance here, unless it's like hyper bullish, then we might see that matter. What more often than not happens is that it's sort of a combination of those two markers. So if you had like maybe what I would do is, I wonder if I can use that thing. That's interesting. 48 degree. I wonder if I can use that in the future for something. I never use that tool. I don't know what I would even use it for. So more often than not, what we see is that it's some kind of a combination in this pocket. Because, and again, it kind of makes sense if you think about it, because there's a breakdown that's happening here, regardless of what you believe about the technical tools that I was just showing you. There's a waveform right here. So like, no matter what, you would look at this and say, yeah, there's a waveform breakdown that occurred in this little pocket. And so there should be some kind of a major support resistance, right? These are actually looking pretty even nowadays, aren't they? It's going up again. Look at that. You guys, I'm sorry. I'm just being myself here, but that, you guys are like, what? He's right. I'm just kidding. I'm joking. I just think it's funny how like you can pull up a tool and be like, whoa, you was right. It's going up. It's gonna go up. That's not how. That's not really how the waves work, but they kind of work that way. That was why I was using the 50% thing, because it's like that's kind of the bottom, and then you look at where the 50% is, and that gives you an idea of where the waveform would come back up to if it reaches back up. And yeah, timing wise, this looks pretty close to accurate. I just think it's funny to like, when I draw something and I'm like, oh, there it is, see? I told you so. It's like, yeah, all right, man, whatever. Everybody does that, but see, it proves it. So this is the general direction I always think about, like, because in the end, this is the build out for the range. So the rest of this doesn't, I'm not saying it doesn't matter, but like, it's sort of like, if this is bullish, right, where do you go back to? And that's the slingshot idea that I use, is this idea that like, well, you probably come back to this first build out, because that's typically what happens. So that's a good way to kind of come up with a price projection that's not maybe hyper bullish, and that's not overly way out of left field, because it just depends on time. My son's over there battling dark wizards in the Legoland, so he's trying to defeat the ultimate evil. And we're over here messing around with a bunch of silly numbers. Talk about unimportant stuff. Just wasting our lives away. He's over there saving the world. That was a joke about the power of imagination. That's okay. So you have here a much more reasonable kind of way of targeting, a future price target. Because when this goes up, just depends on when it goes up, right? This would be the area that you would probably have some kind of a reaccumulation, and potentially you go farther. Potentially you just stop there. I mean, there's no rule that says it has to continue to advance. Usually what we see is that this ends up being the sort of the pocket zone for an advancement, potentially up to the highest possible point, right? And I've been talking about like 15 and 18 and stuff like that, but that's sort of what you would maybe see later on if it builds out, if it goes up, right? So I think our idea of like ups and downs here just happens to be pretty good because of the way we designed it. But this is all basic stuff, kind of speculative stuff. So for right now, we don't really need to worry about the big picture as much as we do just watching the range build out. Because if the range doesn't finish the way you want it to finish, none of that's going to happen. It's just not going to happen. You can't make it happen. But it would tell me, like, to some degree, like, we're probably pretty right about timing, because it looks to me like this is assuming a very simple symmetrical waveform. So I was kind of joking a minute ago saying like, haha, that proves it, because I was just poking fun of myself. But like, there is an element of truth there. You can see that it's following, I don't know how many times here. 1, 2, 3, maybe even back here, we can consider that a down. Up, down, yep. Up, down. This is kind of where it starts breaking down. But ever since this top, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, maybe 12. So 11 times is quite a bit. So 11 times it's followed this waveform of up and down. That's a lot. We could always change, but that's a lot. So I think that's actually pretty significant. I was joking about it, but that could really matter in the end. That is quite a bit. So maybe the implication would be that if this went into an SOS early, it'd have to be before this time. So you'd have to kind of get to a place where you're backing up. That's the weird thing about these, is that if you look at the advancement, the bottom was right. It's right here. It's right on the dot. The top was a little early, and then actually it was already breaking down. So this advancement happened in like 2 days. It was super fast. This waveform has a distance of, from top to top, about 12 days. So I'm on 10-minute chart, which isn't the best chart, but it's, maybe we can do it on the, we'll just use the time. It's probably fine. You get the idea though. So like, if this were to suddenly rocket to the moon, you probably expect it to get to whatever peak it's going to get to Monday or Tuesday, because there's not that much time left. That would be like what happened to us last time, where it just gapped up 100% or whatever. Seems a little absurd to me. And if that happened, you probably wouldn't go much beyond $8. So there's a lot of speculation in this, but I actually think that the way I drew it out might end up being right. I added this waveform after the fact, by the way. I wasn't like leading into this or something. I just kind of looked at it. So it would imply that by next week, you'd probably be in a topping motion, or shortly after being a topping motion, because this one's kind of in the middle, but the topping motion surrounds the peak. So you could have something like that. It is possible that the peak runs and has an extension, kind of like it does here, to about the middle of the wave. So that would be like if we ran up high early, maybe on the 28th, by the 28th or something, we'd be up here. And then the downside would be that backup motion. It doesn't seem very likely though with the build out. But I could see that happening. Yeah. This seems fairly probable to me. However, I would suggest that if it were to go down for a spring, it probably need to get there sooner. And then we can talk about OPEX stuff. So we're entering the third weekend right now. So the last time this happened, the tailwind was met. It's easier to see it on GME. Really, it was the week after. The May 1st is where it built out. So there's more to it than that. I should probably be more specific, but it's okay. Are these just weekly cycles? Is that all I'm seeing? Just like overthinking it? What's this day? Monday? They might just be roughly weekly cycles. Just pump and dumps. Yeah, Monday, July 1st. I'm starting to think that's probably right. Yeah, I don't know, man. Every time people talk about that stuff, nothing really happens. So I'm not trying to be a naysayer, but I'm going to naysay. Somebody said something similar about the 3-year ones, but it was like after the fact. I'm not sure if it was right here. I'll say this. I think the yearly ones matter year over year. I think that's evident in the chart. I don't know about this 3-year stuff. I just can't really validate it. I think we're going to go back up to the top, but if we get a good run. Worst case scenario here is some kind of a distributive action right here where this comes too high. But we haven't made a low, so it doesn't look like it would do that in my opinion. But I guess this could be distributive right here and then start down. Best case scenario is we're running by, I think we're up by July 10th. Mid-July. I've positioned myself where most of the stuff I'm looking at is like a mid-July move. And then everything else I'm kind of like leaps on or whatever. This seems reasonable. Any of these setups would work, I think. Yeah, I think this would have to be earlier if it does come back down. I don't know. Just seems right to me that it would do that. It's a little awkward drawing it out though like this because you're kind of, again, you're making a lot of assumptions that may not really matter. Yeah, we'd have to go into some kind of big motion here. So there's some kind of an important creek line up here around $7, $8. It's part of the reason why I'm seeing it as a chop there, but also, and because I just trust my lines. If I left it there, it's probably important. And then there's a that would kind of be congruent with this midline. So the expectation would be, again, by about, I think it's possible that by about early July, the first week and a half, 2 weeks of July, that we're already moving. It's also possible that it's quite the opposite, because you could be really, really low and then have a rapid movement. So you might be like, well, does that mean I should get, no, because technically, like, this could just moon on like Monday the 8th, right? And just kill all the options for the first week of July. But those are things that I can't really predict. So I'd say for the most part, it looks good though for that second week in July. It seems right. There's like a pretty strong chance, I think, that it happens. Right there. This is just working out like the minutia of a potential move. There's nothing about this that's guaranteed, and you don't have any confirmation until you get an SOS anyways. But if the range built out the way we thought it might, and it has these kind of motions that work out, this seems like a very highly probable move to me. Like, especially this one. I kind of like the idea of not getting a spring and just really throwing everybody out off. But it's built in a way that I think it could happen. Like, you can see the design in it, the downward motion into the beginning of the month of July. Makes sense. Just a long LPS. Lines are boring when we've blown past previous bearish lines before. I'm not sure what you mean by that. We blow past bearish lines because those bearish lines are like creeks and you're jumping them. They're not boring. They're important. Like, these are trends that this is a bearish downtrend. It's also the creek. It's where the resistance is. When you jump it, that's when good things happen. But yeah, so I'm kind of confused what you're saying. It seems like the opposite of what you'd want to say. Like, that's the whole point of this, is like you have an accumulative range back here, and then it hits a support on the midline, and then it just takes off. That's all. Those are based on lines, but it's supports and resistances and creeks. I mean, all of that's good. That's not boring to me. That's the market. That's how you trade, at least in my methodology. Jumping lines is a good thing, especially if they're bearish. So the way that I do stuff makes my charts look silly messy, but it also gives me a method of understanding the movement of the market in terms of, again, waves, accumulation, distribution, accumulation, distribution, accumulation, distribution, and then where those are setting up for future moves. So if we don't have angles of ascent, then you're probably just guessing based on more than likely just like a fib extension or something, or like a previous support and resistance, which all still, again, has to do with lines, because you're measuring things. It's still measurement. It's still technical analysis. There's really no other way to play the market unless you literally are just guessing. I mean, you might as well just flip a coin 50-50. And some of you are like probably thinking what I'm thinking right now, which is, well, at the end of the day, you really don't know, because it could change in the middle. Yeah, right, it could. But that's why you use, there you go, Magic 8 Ball. That's why you use, that's why you use liquidity analysis. That's why I think this is where we start talking about the unknown, and we start talking about what is known, right? Because we don't know what we don't know. There's things that in the market that, yeah, they're going to come down to what an operator wants to do in terms of liquidity, but a lot of times you can kind of estimate it. was making a statement that oversold zones create parabolic movement upward. Oversold. Yes, they can. But that's usually because the oversold zone is in accordance with some kind of a bear trend, right? So like in the sense of like oversold being supply. You start breaking those as you move up, those supply zones, they normally are tripping as oversold, you're right. And then they flip. That's really where the magic happens, but that doesn't usually happen until the very end of a range. So I think the way you worded your statement kind of was confusing, but I feel like I understand what you're saying. So yes, I agree. Right now, which sport is that? No, it's fine. I just didn't understand what you were saying. I think the way you said it, it sounded backwards to me, and I was like, I don't get it. But I think I understand what you're saying now. Totally cool. And by the way, even if you did disagree, it would have been fine. We could just disagree about it. No, you're not wrong. I think we're going to get there. I think it's positioned to go back up. It's a tough one to call because of the price action today and tomorrow could be very, very boring. It might not look like a lot of anything. I'll say this, though. Today was good. We jumped over. I know it doesn't look great, but we jumped over the creek from Tuesday, and that means that we're out of this main trend, at least the first one on AMC. GME is a little different, and it's the same deal. Jumped over. It looks like it's out of it. So in the little boring price action moments, you kind of take what you can get. So we have low volume day today, but it's looking fine. It looks pretty healthy. So just revisiting GME's chart. This is kind of where I thought it might find support. And that if it was going to make a low, this would probably be the time. It could still happen. Hey, pause it. Listen. I'm not telling you to stop. I'm telling you you need to walk away for a minute. I'm not telling you to stop. I'm saying walk away for a minute.
It's stopping.
No, it's not. It's pausing.
Can you go back to it?
Go get a drink of water. And walk around for a minute. Oh, football. Soccer for Americans, yes. How do I feel about fractals? It's Pandora's box. If it's a comparison to like what we've seen on things like AMC or whatever, I don't think it's necessarily wrong because there's ways that. Oh, I see what you're doing. Yeah, you're doing like a repeat. That's like a iterative move. So where it copies the same move, it maybe shrinks it or it compresses it. Totally normal. Yeah, you see that a lot in the wedging price action. So you're correct. Although I would probably say if it did compress, it would probably compress under that blue line. So I'll show you guys what he's showing. So he's using a fractal from this first part, and he's saying it could repeat as a repetition. I agree. In wedging price actions, you see that narrowing repetition. It happens a lot. But what I would say is that I wouldn't position it so it goes above here. That implies an SOS. It's possible, but I think that usually we don't see the iteration do that. It's more of like a push up to the creek, and it might advance the creek. Because you got to remember, like, I guess it's just an opinion. I don't know. Now I'm thinking about it. It could just be an opinion of mine. But I'm of the opinion that the first move and the second move tend to iterate, but they're designed to get you from the buying climax to like the phase B top, and you've got it going to where it's going into an SOS and a backup, which would imply that it's going to back up and then just run again. I'm of the opinion that this runs up high here to like the 38 mark or so to check that creek, and then it falls back and finds either. So we're really talking about the exact same things, kind of apples and oranges, because we're really looking at a similar move. Like this is almost the same exact thing that you're drawing, but I'm drawing it here. Does that make sense? There's really no different. I mean, I could make this go up higher and then it would look more the same. So what I would say is that what needs to happen first is that we need to kind of press that creek again. We need to check it again. Then I think you have a backup to try to find support, and then we'll see. And yeah, I think you could probably interpret it that way, where it has like these up thrusts, 1, 2, and then it comes back for the third one. And then it backs up and does this stuff low here over the creek. Absolutely, that's a possibility. But just remember that like the nature of an iteration where it's copying and pasting kind of a fractal move is more about the way the stock is being traded. Like this is a method of trading to get you from a low back to a high to retest a level. And so to have that same method of trading happen here, the question is like, well, where is the level that you're maybe going to? And I would say it's probably there. Does that make sense? So I would even go so far as to say like this is the pattern down here, not this guy necessarily. But that's where, again, we can kind of like go back and forth about it. I don't personally like fractals as a comparison of like a one-to-one comparison. I like it when people use them for proportional comparisons. So that was like what I did with AMC and GME with the, I don't even know where it is anymore. Forget it. I'm not going to do that. When I did AMC versus GME and I did the AMC 2021 run-up, I was looking at proportional comparisons. Could it set up the same way? So you use stuff like fib retracements. You look at basic things like, okay, if it creek crosses, here's what we might expect. And it did work out. I mean, it gave us pretty good targets. But I didn't expect it necessarily to be one-to-one. And then you have to talk about the differences. Like, if the difference matters, you can't ignore it. You can't ignore it if you make an upthrust that wasn't there in the original fractal, because that's ignorance pretty much of like range analysis. And AMC and GME, but mostly AMC, I would say, the ranges all look pretty much the same. They just end differently. And then if you're not paying attention, you wouldn't know why they end differently. And it's all about the initial setup. So like from a fractal standpoint, it looks like algorithmically it's doing the same exact thing. And that's why I know I don't know if I saved these, but I did the comparison between these lower regions down here, a few weeks ago or like a few days ago, and the breakdowns are the same. They end differently because they don't finish the same way, but they actually don't set up the same way either. So yeah, so the setups here are almost identical. This is where I think it's okay to do like a fractal analysis if it's giving you the information about the pattern of trading and what's being accomplished. What's not okay is to take this, copy, paste it, and say it's going to be the same, and then not have any real understanding of why this is different from this bottom. I feel like a lot of people that do fractal analysis, and I feel like people feel like I'm beating them up. I'm not really. I'm just trying to like explain my reasoning. This is where people get kind of, I don't know, think I'm like disparaging their work. But like folks will do this and they'll say like, this is 1-to-1, Booksy. And I'm like, yeah, but is it, this has an upthrust and a sign of weakness, and this one is not. It's like, and then you look at where the volume is in this range, and it's all in these massive tops volume. There's no top volume here really. It's mostly in these bottoms, and except for like some of the sell-offs, but like there's not really high volumes in the tops. So like there's things about them that look really, really similar from a fractal standpoint, but then like you get to the nitty-gritty and you're like, no, they're not really the same. The motions are the same because you're getting that same bounce into a wave. So you get the same bounce into a wave. But then from there, they're pretty different. The way that this moves and the way this moves are very different from one another. So that's the danger of fractal analysis. Like you don't want to apply something that you think is going to happen just because. So the reason that like I didn't think this was the same as the previous two was evident at the time. I said there's evidence that this looks different. This looks much more bullish. We're lacking kind of that topping action. And you guys can go back to the streams if you really want to validate it, that I was very bullish on this because it didn't have the negative markers that you see. And that doesn't really have a lot to do with fractals so much as it does just, again, liquidity analysis. I'm sure I went back and compared this area to this area just to show you that they were different. But the big picture here was also evident that like, oh, there's a big M cross here. Those are things that we talk about because that is kind of fractal analysis at the end of the day, but it's also waveform analysis, right? So big M shape, 1, 2, and then you've got a little 1, 2, and then you've got kind of a mirrored action in and out, right? Here and here. And that's typical of that falling action. And it actually happens on the micro here, right there, and then right there, and right here. It's just not, scale-wise, it's not the same. So you have to be mindful of like what's being accomplished. That's mostly what I've been doing. So if you're not from around here, I cut a lot of my teeth a couple years ago just doing fractal analysis on AMC, and then I wouldn't say I moved away from it completely. A lot of the stuff that I do still involves fractal analysis. There's a lot of it. But the key word is analysis. Like you can use fractals, I don't mind. I feel like everybody should do what they want to do when they analyze the market, and fractals are a real thing. They are. And they're present, and you can see them all over the place. The same pattern will play out micro to macro all over the place on AMC and GME. But it's the analysis part that I think where we really differ, and why oftentimes if someone posts a fractal, I'll be like, no, I don't agree with that. But your fractal's fine. I just think that I personally wouldn't expect it to advance here just yet. I wait for any kind of a backup or a spring, because that's the key difference, right? It's like if I'm looking at this, I think it's going to push up and do a 50% retrace, Yeah, I mean, that's basically what I have. Go do the fib extension on this. Oh, it pushed up and then it retraced and chopped around 50% down to the 618. So you do the same thing again here. And you would say, yeah, it's very possible, you know, that we see a similar push up to, you know, that high and then come back down to 29 down to maybe even 27. That makes sense to me. Why? Because those are the key central levels. So you're getting like a really clean bullish setup. That's nice, y'all. Like, these are the center marks. And so if it were to come back down, let's say it pushed to 38 or something like that, and it were to come back down and find the golden pocket here between the 0.5 and 618, it's right on that center mark. It's beautiful. So it really just depends on how far it goes, you know, on the push-up. So I would say, like, does it make sense from a fractal standpoint? Is it repeating a similar pattern? Probably a similar pattern being repeated. But we're analyzing this as a local spring or possible breakdown hook, just depending on how it finishes. This is starting to look more and more to me like it might actually take off tomorrow or today even. At first I was feeling really pessimistic, like they could just chop all week. But I'm like staring at this thinking that it's very possible that this Friday starts the move and that we can finish the move Monday as opposed to just doing it all Monday. We might go ahead and do the halfway point today and then do the rest Monday. I'm starting to feel like that might happen because the way this is set up, not really interested in like being perfect here, but the way it's set up, the 50% on the breakdown, if this is a waveform, would imply that you're back up here by Tuesday, like opening, Tuesday open. So, I mean, I guess it could be all in one day. I don't know. So another thing we might do is, because you're doing a fractal comparison that I kind of like as an iteration, is you might take a just a general trajectory of this. It doesn't have to be perfect. Just kind of take a cross center from the bottom, just across the tops here. I wouldn't go all the way to the peak. Again, just because I would think of it more of like an average. So kind of like that hook line maybe. And then drag that over. And I guess the bottom's here technically. So you can also use that and see if that helps. And that seems right. It's like right where that hook is. I'm starting to think I've pretty much narrowed in on what the main bullish probability here. Again, that doesn't have to happen. But it's kind of the main bullish probability in my opinion. I think I'm getting it as tight as I can probably get it. 60 degrees, so this is a little steeper. That's like 60. It's all pretty close. Pretty much the same projection either way. Yeah, it kind of just looks like we're seeing a projection from like here to here. I think we got it right. So if you're starting to see that with the trajectories, the mirrored trajectory from down to up, and then the trajectory of the iteration that followed, if you're starting to see that with the waveform analysis that we got, like, okay, you'd probably hit a top by around next week, or, I'm sorry, over here, by about Tuesday. Now you've got three things that are telling you that you should see, that you could see upside, I should say, by about next Tuesday at open. That's a lot of evidence so far that there's a possible wave form up. We've got a cross here that's indicating that you could get there. maybe even tomorrow, and then again like back up, and then Monday maybe have like a 50-50 around it. That happens quite a bit. That works as well. So it gives you like a 50-50 around that mark, which is also a 50-50 around the previous top. So that's pretty clean. Like the setup here looks pretty good. You've got a support like you bounce off of. It looks like 38.62, which is basically like right at the top of this guy. Everything about this looks really nice. Doesn't have to do it, but it does look good. I'm going to take a quick 2-minute break and use the restroom. I'll be right back. All right. Sorry. A 1,000 theories equals 0. Basically, don't use bars patterns. Well, just be careful with them. The idea of a bars pattern is useful for analysis. I just don't think you should, copy them. There's a way to look through them that can be really, really, really helpful though. But it just has to be done with proportion in mind. It has to be done with the current range in mind. You really can use them to help learn a lot, but there's kind of a cult out there, and that sounds really bad, but there is kind of a cult mentality now that because there's an algorithm, that the fractals are going to just give you all the answers. They give you a lot of answers. I learned a lot from studying the fractals on AMC and GME. But the nature of the fractal is misleading. because a fractal is a pattern within a pattern. So the idea of a fractal for the M shapes, we talk about this quite a bit, right? Is that you see the same pattern within the same pattern over and over again. It's really just like a distribution, right? And or whatever, an accumulation, right? And those things appear to us. So if you were to look at the fractals of the big picture, it looks exactly like the fractals of the smaller ones. And it'll especially confirm if it's also bullish. It's going to look identical or nearly identical. Is that algorithmic trading at work? Probably. The fact that they look so similar nowadays to one another, yeah. But that is also in the definition of a fractal. Like literally the word fractal. Go look it up. It's a mathematical term for a pattern within a pattern. It's a pattern that builds a larger pattern. So the term in and of itself can be very misleading because I think of it as like a behavioral pattern. Like this is the way the stock, I repeat this quite a bit, but it's a behavioral pattern. This is the way the stock is being traded. And therefore, just like any behavior, it doesn't always look one-to-one. It's not always consistent. Sometimes the behavior changes, but it's a pattern. As a pattern of behavior, it's a useful tool. And I do think of it as behavior because there's operators and composite operators, and they're running these algorithms that are trading the market, and these composite algorithms are causing this pattern of behavior to appear over and over and over again. Why? Because it's working for them some kind of liquidity goal. That's all there is to it. Then you can sort of start looking at it more critically and saying, okay, what is the goal that's being achieved in that move? What's the point of that? And sometimes it's bearish and sometimes it's bullish. Then it's not just a pattern that's got no volume. Then it's not just some empty bars pattern or some method of like up, down, up, down. Then it's like, oh, there's something being accomplished. What would be the goal here? And that helps you put it into context, especially when we're looking at time frame, because context is really important. The context of the bigger time frame can help you see something like that giant 400% move that we had in AMC. It can also help you to understand why there could be a setup here that drops us down to $3. I mean, so context is very important. And when you start looking at context, it's like, yeah, it gives you those big, big targets. And then suddenly the little guys are just accomplishing, it's like lemmings, right? The micro fractals are just kind of accomplishing the goals of a much bigger trading period, or a much bigger trading goal. And that's really important. I think a lot of us can learn a lot from those fractal analysis, but then you have to go back and just sort of picture and remember that the big picture defines the little picture, not the other way around. So these are just pieces that make up a much larger image. I talk about the gestalt, right? Which is like you've got little pieces and they're added up to give you a greater sum. So putting things into context is really important. That's why when you asked me about that, not to repeat myself all over again, but you asked me about this and you said, what do I think about fractals? And it just kind of depends. What you're doing to me looks like a micro iteration. Like you're taking this and saying it seems to be playing out a similar way. You could be right. It could be playing out a similar way, and it, we don't know exactly what happens, but if it does go back up, it probably will look pretty similar. And I would see that as, yeah, because we're wrapping around a $29.47 range. And then on the micro, wrapping around a $27 range. So it's like they're accomplishing goals by repeating the same trading pattern, right, in a narrower way. That's pretty much true of all wedges and narrowing price action. You see that kind of repetition. And you don't have to take my word for it. You can just go back and look at a wedge and observe the first few moves and then see what happens later. They look pretty much the same usually. They're trying to trade a range for a particular purpose. So if it works, it works. Why fix it? Just do it again. Less volume. You see the volume get sucked out of the range as it goes usually. So technical P analysis? What are you talking about? So Mikey says, I think we'll drop to 20 and then take off. Well, I'll tell you this much, Mikey. I'm not saying it can't happen because that's silly to do in the market. You might be right. And if you're right, come on back and we'll talk about it. But I don't want to do that. And I've already kind of made a case for it. I don't want to drop first. I want to drop, if we do drop, I want to drop later. I want to go ahead and go up and test the highs first. Because as a range, that kind of a drop right now would probably be more of a weakness than a strength. Just the way this range is built out. All we've done is auto-reacted and come back down. So if the first thing you do after a big reaction to a drop, so we made a buying climax, then we made a selling climax. We've started a new range. We're positioning ourselves between 47 and 22. If the first thing we do after we make an auto reaction is come back down and make a new low, even if it becomes bullish later and has a change of character, my assumption would have to be at first that that's a sign of weakness. So I don't want to do that. I would much rather go ahead and go up and show strength by going up and pushing up, making a phase B top. That's much more of a powerful accumulation range. It just is. And then, yeah, frankly, if we wanted to come down after that and make a spring action, I would be like, okay, we'll see you down at 20. You know what I mean? Totally possible. This is like classic Wyckofian movement, you know what I mean, in terms of a range. Part of me thinks that it won't be that clean, like it almost never is. So it would be strange to see it set up so neatly, but yeah. So I'm not against the idea of going down to 20, but I think it shouldn't happen now if we want this to be bullish. I think we need to jump the local creek and then come back down. And we might at that point see it be a rapid fire drop, It's hard to say. I don't think this creek is very clear, by the way. I think it's kind of flat, like kind of a curve down. But that to me would be very healthy. Dropping right now to make a new low, I cannot argue that it's strong. I don't know why. I've been trying to figure it out, but I just don't feel like it would be very strong. I've been looking at it over and over. I just can't imagine how that would be a sign of anything good. I don't know. I mean, and the thing is, we talk about these falling S-curves. It's kind of like here, you're like, well, that happened here, Booksy. It went and bopped down and then it dropped low. That looked bad. Yeah, but the difference is that there was a need to do that after it jumped the creek. We never really made a bottom. We just kind of kept going. We didn't really bottom out here. It would have come back down regardless. In my opinion, there really wasn't much to look at here other than the diamond. And once we saw the diamond exit, you're like, all right, I had to make a decision. If that had just come back up, I thought that had been a bit unusual. So I knew it would have to at least come down to 20 in that case, which is that floor. But it never checked the creek, so it's kind of a weird, and this is a bizarre, by the way, this is a really bizarre looking, if you go to extended hours, it looks like we didn't even jump it till way over here. So that might be a play right now. I can't really confirm or deny that, but it might be at play right here where I have to go look at extended hours trading, but I think this actually goes high, really high. So I don't know, it's just different. If you go look at this in extended hours, this looks like it's still within, I don't know. So the build out here is a little strange. There wasn't, the setup for it was kind of looked like that double reversal that we see on diamonds. So why not do it again right now, Booksy? I don't know. I think because this is the reaction to the big sell-off, and then this is the buy-in to a reaccumulation. I think that's the difference. So I want this to be a healthy range. This is just like a auto reaction down, you know, from a massive sell-off or from a massive run-up. I'd like for this to build out as a reaccumulation here locally. So it's a little different. All you really care about when these kind of sell-offs is just finding a bottom. This hasn't advanced though. So this is different. If this had come all the way up to here, we'd probably be like, okay, whatever. It just needs to find a bottom now. So we would just be looking for it to find a bottom. And you're just going to chop till you find that bottom and exit. You know what I mean? But that's not the case. Like, we didn't make a new high. Even in extended trading hours, this didn't come up to be over the top. So this is within the previous sell-off. So this should be either a distribution or, and maybe you could call it a redistribution, but this is either a distribution or accumulation. I'm hoping for a reaccumulation. So that's why I'm treating it like it's its own area. And I don't really want this to come down again just yet. I mean, I guess if it did, it did. There's nothing I can do about it. Yeah. Not the end all be all. I'm just cautious. I guess what I'm thinking is, like, in my brain, I'm thinking about how we very rarely see the really strong reaccumulation schematic on AMC. Like, it just doesn't show up very much in the chart. And so I would like to see it so that we would have a better idea of direction instead of the normal, which is like we chop and then we drop off the cliff. We get that silly curtain rod drop. And then you end up with this like long-winded, very distributive looking, you know, motion that eventually returns maybe in some upside, but it's super stressful. Really, the best example we have of that good reaccumulation schematic is probably the June to May area. It's really like February, April, May of 2021. There doesn't really exist another one that's very large on AMC. That's the only one we have. That's a big scale. And it doesn't matter what reaccumulation schematic you look at, they're all basically the same, which is that, like, after you make that initial pull down, you don't want to go down again. So unless you just misread the auto reaction, this would be like your auto reaction. So unless you misread it and it's not actually done, and there's a bigger auto reaction that's going to happen, which I think is what we see here, that this wasn't actually the auto reaction. And you can kind of tell because there's no singular motion here. It's just a chop. It looks more like a bear flag. And then you get a big reaction. Then you get a massive volume spike. So this wasn't really like that hard to distinguish between the two. But once you get that auto reaction, like, you don't want to immediately come back down and make new lows, especially if you've had, you know, within this range, another auto reaction. You know, to me, I think it's fairly self-evident on GME, but you don't really want to see that. So one of the things that you'll see in a reaccumulation, here I'm going to simplify it, is that you'll see like and they'll define them different ways because this is the auto reaction in a distribution, but this is the auto reaction, the second move is the auto reaction in the reaccumulation. And basically what you typically find is once it makes that bottom, like, you don't come back through it again unless it's just like a spring. So then you basically can form out like a normal range, and you might get a spring action at the end, but you typically won't see it come back through this low. It stays elevated. This to me is not normal for AMC. Like we almost never see it that good, where it just kind of stays elevated. One example of that is, I guess a good one is right here. I mean, this stayed very elevated. Once it made that initial reaction down, it didn't come below the preliminary supports on the way up. Or excuse me, the preliminary supplies on the way up. I always get that backwards. It's preliminary supply because it's an early attempt to stop the advancement. But you don't see it drop below those supports, and then it ultimately, when it comes back down, it just respects this range that's built out. It respects this area here. And it doesn't go back and like mess with the earlier setup. This one, also the same deal. It just kind of respects the range after it builds the range, but you can see the weakness and all the multiple signs of weakness and the supply upthrusts and stuff. Then there's another example right here. This is one where similar story. So this has a spring. It's right at the end. But if we had immediately come back down, like first thing, after making this bottom, we came up and then we just dropped again after the auto react, I wouldn't have been like super bullish about it. So the idea was we went back up and tested some levels first. And some of you are looking at this like, yeah, but what if that's what we just experienced and then this and that? Well, again, it's like, this is where Wyckoff you kind of lose the, it jumped the creek and didn't return. You know what I mean? It made a little spring bottom locally. But I would have said like your supports were much higher at that point, like right here. So it sets up a real low kind of phase B move. Anyways, every range is a little different. The big picture one being the one from way back in January to May. And that, I mean, there's like there's like little ones that exist here and there on bottoms. Unfortunately for AMC, we don't make a lot of those because we're not often going back up to the upside. This one's kind of like that, this little guy. Most of these are bad though, they're like distributive. They end up distributing later anyways. So not really good examples for us of what we would like to see. So I guess what I'm trying to say is AMC is rarely ideal, but when it works really well. So this is a good one because it's kind of similar to what we're experiencing, right? So again, once you kind of make that bottom, in this case, it never really comes back down again. But it does drop slightly below the support that's built, the very, very end. So you don't go back down beneath the preliminary supply. It stays fairly elevated. Once it kind of reaches the sort of the selling climax here, it's done. Jumps the creek, moves on, and then it stays up. This arguably, you could say, did have an auto reaction and then came low again. Again, I don't think every Wyckoff range is like identical. They're just not the same. No one would say that. But anywho. This range is also kind of weird. It does some weird stuff. So yeah, I'm not saying we can't go down. I just don't think, based on the way this is set up currently, I don't feel like it would be in our best interest. It's pretty large right now as a setup. We've got some little bit of time on our hands to go further. So I'd rather not see it rush to some kind of a dipping spring action that we don't really want to see right away. Some of you are all looking at it like, yeah, but 430, Booksy. I know. But that's including this previous area as part of the setup. And I'm not really doing that. I'm trying to look at just this. So I know the GME is sort of similar. So if anything, you might say like, well, if I think this is going to happen, maybe we get the dip now and we go down to like 450, but we wouldn't go lower than that based on this alone. It's already kind of dicey because this is the preliminary supply. You wouldn't want to drop beneath it. So I think it's on a little bit of a razor's edge. I don't really like the idea of it going low right now. It just causes a lot of questions in my mind. This is a little different because this has an earlier prelim supply. AMC's is kind of janky. It doesn't really make a lot of sense to me because there's not really anything here. You could look at extended hours, but there's two motions up, so that would be like really tight around 458. So if I want this to be really bullish, I want this to go ahead and create a strong bottom here, jump the creek, and then if it needs to come back down to the creek, that's fine. But go ahead and advance and then come back down later if you need to. It looks so much like a wave 4 before an ending diagonal for GME. Like that before this. Maybe. You know, and there's a lot of possibility in price in terms of like where we go later. But I think that you could have and I don't know if you're looking at the micro or whatever, if you're looking at this big move, we could just have like a push that goes up to like 85 and then it's done. I mean, there's a lot of here that warrants correction if you think that it needs more correction. This is kind of what I'm wondering because AMC also has a similar vibe where you might get a push up to like above the previous top, $15 to $18 or something at the highest, in my opinion, at this point. That's probably what we'd be looking at. And then that's kind of it. You know what I mean? Like you don't really need to go anymore. And when we looked at macro creeks, there wasn't really any reason that you would go any higher. You would push that and then be done. So it was about as high as we would need to go, as up to about 15 or 16. And I mean that in like a technical way. Like there's not really a pressing need to go any higher at that point. Once you've tested the creek again, then you go back and you can find support. And in terms of like an M shape, it's kind of like the double M shape we talk about. Push 1, push 2. This would be like the middle of the two M shapes, or the middle of the M shape, I guess you could say, potentially. Yeah, so I don't know. I mean, the idea of coming down to 20 on GME doesn't feel right to me right now, but I also think that this could have one more cycle in it. And so take that for what you will. Some people may not think that there's another cycle possible, so they're going to look at this and see the breakdown as likely, and then it's going to go. I mean, if it broke down, honestly, if it broke down and went to 20, I'd be bullish, like short term. I wouldn't know exactly what to expect because I don't know if it can even get above 33 if it happened. I think it's possible we don't get a build out. That's what people want. I'd be really nervous about coming back up and breaking down and distributing along 33. Right now, if we went up, that really wouldn't be much of a concern to me. I would only be concerned about coming up above the top. So if we went up right now in a gentle waveform with good, good volume off the bottom and then kind of lesser volume at the top this time, not like this one. This is a very high volume top. But have good volume like this guy buy in and then just volume kind of drop off on the top. That would be really bullish to me. I would feel so good about it. I mean, I guess I'm just trying to tell you what I want because I think those would be the proper signals that like, yeah, this looks pretty healthy. So high volume in the buy-in and then low volume in the top. And then you could have a high volume sell-off after, but not like in the top. That would be really strong. I just don't like the idea of going low here for a number of reasons, but I don't control the market, as you are very well aware. So yeah, we've got M shape 1, M shape 2. It jumped the creek. Now you should have another double M shape. I mean, I'm drawing this in a way that makes sense to me from a wave perspective, but I didn't really draw what I think in terms of M shapes or whatever. Because like I was saying, this could go low. This would be like the time to do it after the creek jump. If you wanted to see the drop down or a drop down, this would be kind of a localized micro spring, really small. But you could see that drop down a little bit just to spook people. Otherwise, I wouldn't expect much from this. I think this is just number one. You're going to get some kind of a bottoming action. Ideally, I don't really want to see a spring, so I guess ideally I'd rather just kind of go up. Then it would jump this guy, and then it would probably again distribute again, and then come back to this creek, and then you would have your advancement. So if I were being really precise, instead of this little like doodad I drew, it may be more like that, where each of these ends up being it's kind of setting up low though. Where is that going? Yeah, it's just coming from the top. So this is one of those like fib fan setups where it's just kind of fanning out. This is what I was worried about for this week. So we would just get like a walk around, not really see anything happen. Maybe Friday. Anyways. This would be an SOS here if it did it again. And then you could have like a really deep backup. Maybe like a double bottom or something if it came down to it. Sure. You don't really have to come back to this creek though. It just depends. It could be like that and would probably be fine. But whatever. All right. Yeah, I think we might actually be in for a Good Friday move because at least the speed at which it's going makes me feel a bit optimistic that we can go ahead and see that move out. This raised the creek quite a bit when it pushed out. So at lowest, I would say maybe 23, unless maybe we get that dip to 23, 29. I don't want to go below, I still don't want to go below 2270. I don't really need to keep talking about that. It's just my preference. If it happens, it happens. I will analyze it regardless. You analyze what's there, not what you want to be there. So, yeah. So if it happens, it happens. But right now, I'm feeling pretty good about this setup. It looks okay. The only real question in my mind is, well, there's twofold. A, do we actually get the bottom? And then B, if we get the bottom in, when does it hit the high? I still think Tuesday is likely, but Monday or Tuesday. Yeah. This looks right to me. So this actually looks pretty close to what I would expect. See how these intersect like perfectly? Like the downward creeks and the upward creeks are creating really simple like stair steps. This is something that you'd want to see in the walkout, but you'd also want to watch the range. So like what it tells me is like, are these in the right position? You have like your auto reaction. And if you do, like, is there another low afterwards? Is it a sign of weakness? Then you look at the rest of the range build out. You watch to see if it can jump over the creek here, of course. But then you notice that each of these fanning actions gives you a really clean jump. And it's almost like a perfect ladder underneath the major cross that's been established on this bottom M. And then you can see the build out. It's like a ramp. So the next one would also ramp. So I would go from the bottom to wherever this is, like here, for example. As you should see these accelerate as it goes. So each one of these pushes up to the next one in sequence. Looks good. This is more of a trajectory, not like a hard rule, but so this actually looks like it would take a little more time. Yeah. Is it going to get us to an SOS? Maybe. It's really small. It's a small little area. My only major concern right now is you see like the middle line. We were talking about how like we wanted to trade above it mostly. Sometimes in an accumulation, when you get to the end, if something changes, you end up losing the midline. Or if you're about to go into a spring, you might start trading really heavily below the midline right before you dive. So I'm not sure yet. This could be the attempt for a spring right here, because it'll reject off that midline before it goes down. So it's situating kind of right on it. So I'm not sure. It won't matter though. Once it jumps over, it jumps over. I don't think you want to see it come back. If it's bullish and it jumps over, it won't come back through that again. So it either has a late spring like way over here, or it doesn't have a spring at all if it jumps. That's my thought. Yeah, this looks pretty good. It's a good setup. It's just boring because it's built out along a really wide area. When we dropped in, we sort of knew that, because as soon as we dropped in, it was like, yeah, this could take all week. They had the setup wide enough. I think this initial move gives you the space you need. I still think we're building out a kind of a floor here, regardless if it's the range ends as accumulation or distribution. This should definitely be marked off on your charts around 2485, and then another one around 2410. Because those areas are now super, super vital as a range would be. Yeah, I can see why people think this is just going to be like a bear flag and drop. Just got to wait it out. I'm not seeing anything that's particularly bearish right now, but this didn't come too low, so looks good. I'm going to go lower today because this, like I said, this isn't left this area yet. If you're just looking at it like as it's in the pocket, this is right where you would probably try to sell down if you're trying to sell it down for liquidity or just to drop the price. It's right here, right under that middle, usually from the center. So if I were going to try to, I'd do it here, but and try to push lower below this trend. I'm not positive that's the goal, so I can't tell you with absolute certainty. Like in a range, this doesn't really look like much of anything to me. Maybe I'm missing something, but I don't see any kind of real major hooking action. I'm just seeing like we're kind of halfway through it. So that's the way I'm interpreting it. There's just so much space here. It'd be weird to have it advance and then or drop and then just keep dropping. But if it did, we would keep this one. We'd lose the rest of these for now. We would keep this like final outward creek. And unfortunately, if it dropped here, you could have a lot more space. Yeah, I mean, it's low volume, but so that might again look more bearish. But I'm kind of looking at this like where is the volume, and seeing it mostly in the bottoms here. I'm not really seeing super high volume tops. Like once we kind of get to the top, the volume is sort of light. The selling picks up, but it's not like super high distribution, and we're seeing these kind of bouncing shapes. This is more typical of accumulation than distribution, because you're getting the buy-in quickly when it hits the lows. You know, it could change, but notice the difference between this area right here and like this area. It's just simple, straightforward stuff, right? You can just see it in the price action. You see the movements. Those up thrusts have all the volume. Again, it's very similar, but it's like, if you really look at it, you'll see there's high volume on the sell-offs and the buy-ups into those tops. And then the top, we don't spend any time in the tops, you know. This is a little different. We're kind of like getting up there and then just kind of chilling out. So... And part of it could be a reloading, and this is where the LSPY comes in. Part of it could be a reloading of shares to drop it again, of selling positions. But if that's the case, I'm not seeing a whole lot of short covering. It looks very light, the volume. I don't know. I'm just doing the best I can. That's all I can do. I might be right about some things and then get to the end and it's not right, you know. I could be right that this was more cumulative, but then there's a change of character and it develops like a hook, and it was just a way of playing out some kind of a trap. It's not an excuse. If I'm wrong, I'm wrong. I misread it, but it's just a way of saying that at the end of the day, like, we don't have any confirmation yet, so there's really no reason to speculate beyond what we can see. And like, this is all I can kind of see right now is like, all right, well, if it's bullish, this should happen. Pretty confident this would happen if it's bullish. It may be really fast. The way this is setting up kind of looks like it would be kind of tight. But yeah, I think you would see a buy up that pushes up high to like 26. Then you'd get a back up to the creek. This is kind of the low creek here. It was established on the previous because you can see the waveform, like up, down, up. It also makes sense because if it's a waveform, then this would be like distribution, or excuse me, this would be accumulation, this would be distribution, then this would be accumulation, and you would try to push over the one more time. So in terms of a rejection, like, it's kind of in the same spot, you know? It doesn't really make any difference. So that waveform could then push to the upside. And what that does is it, if it pushes back to the upside here, and I'll make this red so you can see it. If this were to push back to the upside on this wave down, and it's been going on for a while, I guess. You can see it goes back quite a ways. Probably goes back to this peak, to be honest. Yeah, it goes back quite a ways. This wave, if it breaks up it gives you an opportunity to then see it return here because there's an upward momentum wave. So you're kind of like shifting direction. So the change in direction comes with the creek jump right here, where you're jumping over this creek, this resistance, and it comes with a wave cross. So it's a wave cross locally that propels you back up, and then it's a creek cross on the bigger picture, which then throws you up into a larger creek cross higher. So the nature of this motion, my argument is that the nature of this motion would be that it's like essentially it's a wave back to the upside, and you're using the chop here on the microwave, call it that, to get you to the bottom of a larger wave action, right? So the microwave action kind of ends here, and then you resume like a larger motion. So I guess what I'm trying to say is my argument would be that we're doing this as a bigger wave action, and that this is all part of a smaller wave. Does it make sense? All that stuff, again, you have to wait for confirmation. So if I'm, and I kind of mentioned it before, but like there's a midline here on this lower structure, and that's what I was looking at the other day, and then there's a midline on the higher structure. You'll notice that we rocketed off the midline here on the higher structure, and then we haven't really tested at all this lower structure. So like confirmation probably comes in the form of, the best confirmation is going to come in the form of that, because it's going to cross, I can't tell you it's going to cross exactly right there, but it'll be nearby. Usually I don't know if it's an algorithmic thing or what, but usually the institutions have it set up so that you kind of endure them at the same time or similar time. That's why you can do like triangulation. So if I'm going to test this, there's a couple places you could then break down. So this is where things get kind of maybe easier, I guess, to see. So if you're like kind of lost and you're like, well, I don't know how to measure that. Where do you know where the breakouts and breakdowns are? Well, there's really only a couple places that you would see that breakdown. So one of them would be on, excuse me, on this midline. So could you see a breakdown right now? Maybe. But I would venture to say that probably instead you see it go ahead and try to advance to the top, because we haven't tested the top of this range, which means you will see it jump. If that happens, you would see it jump over the local creek here. So probably the number one spot for a breakdown would be the same place you get confirmation, which is up here at 27. So as a trader, that tells me that there's a decently high probability that it's going to go up first, because I would want to go back and confirm a hook here if I think it's going to hook. And then it would look like a false breakout. It's kind of perfect in that regard. It would look like a fake breakout here, and then it would come back down. So that would be one place that you could have a hook, and that could drop you pretty far, because at that point you may have abandoned potentially this range, so you're going to drop beneath 23, and then you have to look at this big picture like, well, snap, then you're kind of on this lower wave, and then what? Well, probably a bigger wave down. This is where things get kind of dicey, because there is another one that's significantly lower, and that's here. That's this wave out and then potentially back down. This is why when the cat ears break down, it's like right over here. This is why when the cat ears break down, it's like really bad. You can go really, really low. So this is like the setup for that. Paw, ear 1, ear 2, death, right? Because you'd abandon this little guy, slingshot downward, and then you'd have to go to another one. And the only other one's like way over here. So the dynamics of this are fairly straightforward. I think in both cases, you probably are going to come up to 27. Because again, we haven't checked it. It doesn't make sense, and it could act as both a confirmation and as a hook. So I don't find it very likely that you just break down from here. That doesn't mean you can't make a local spring though. So that's what you were really asking about when you asked about low. Is like, well, could it make it a little lower here? Yeah, I mean, it could technically be a little local spring here. It hasn't come above the top. So all that we've seen is it range out. So it could still come low first. It doesn't have to. It's just possible. So anywho, that's the way I would define this price action on the whole, and like whether or not you go up or down. Largely probably going to be dependent on what happens right up here. So I'm imagining that this is going to happen going into Friday. I mean, it's a little complicated because if I'm like an operator trying to confuse people, I'd probably do that and then come back down Friday here. Like I wouldn't tell you that it's going to go down just yet. And it just depends. That could actually still be healthy. That would be the most deceptive thing to do. That's probably what's going to happen. This is kind of like neutral option of like, go ahead and do the advancement and get the SOS and then back up and then get another SOS and then do a deep backup that comes back down to like the bottom. That would be the most confusing thing. And the week at like 25. This is too easy. I don't know. This already would look like a breakdown. It's almost too easy. And that would look like a breakout, so I bet you we end up with something like this instead. And they can go either way. So I closed my Discord for now. It's not that you can't invite other people, but I had somebody come in that was kind of a stalker for me, who pretty much just stalks my channels and makes nasty comments. So they had come in and I didn't even have to boot them. They just left on their own. But I had to like ban them on YouTube stuff. And they've been pretty persistent, so I wouldn't put it past them to like make up a fake name and just start spreading crap again, drama. So I hate to say it because I know that that person feels justified or whatever in what they're saying, and they're gonna keep doing it. But I just kind of want to wait for it to cool off a bit for a while. You're not missing a whole lot. If you watch the streams, then you pretty much get you get more information here, I think. I do post there, but usually it's just like little charts. I might post something like this and talk about it. But yeah, so. Yeah, and AMC's chart's a little different than GME. Again, nothing's really happened right now, so I can't really comment on it. Usually by the time I exit the stream around noon, something ends up happening, right? I'm not here to cover it, but so I'm sure that there'll be something at the end of the price or end of the day today. But if I'm just trying to like consolidate this price into a corner or create a sense of uneasiness, I might just chop it today if I'm an operator. End the day at basically 0. And if I'm wanting to go for a spring, like now would be the time. So just like with GME, like if you want to go ahead and drive the price down, this would be the moment to do that because you've got some space on the creek to drive the price low and try for it. So You know, locally, does it mean that it's going to drop off the face of the earth? I don't think it does. But I mean, I guess if you really wanted to spook people, this might be a good place to do it. It's like create a little tiny bottom here. That's kind of like, looks like a hook. I mean, that to me looks like it would be breakdown, but locally it could just be like a little spring. I don't know. I tend to think that the operators use as little of their liquidity as possible to achieve their goals of creating uncertainty. So part of me thinks that this is more likely to just sort of see the chop today and just end the day like neutral back at 480 or something like that, 481. We'll see. AMC's a little different too because GME's setup is wider. So if GME advanced early here, it's hard for me to see them, or if they advanced over here, it's harder for me to see them coming down again. But AMC is different. It does not have that same kind of vibe to it. Everything is a lot steeper. I mean, maybe, I guess if it advanced way up here, but like locally, these trends are pretty steep. So they kind of look like if they advanced half-heartedly and we sat underneath or at 41, we could still have a drop, you know. It's just a different setup. So that's it. I'm not going to do any more today. I think I'm done. This looks right to me. This is a weird move. Honestly, it kind of looks like it's setting up for a bigger drop. So that might end up being where we see like a downward action on some stocks. On these ones we're talking about. It's hard to tell, but it just looks like a, kind of looks like an iteration of this pump. This is distributive though. You see how it came like way up high? That's ugly. I wonder if there's a fib level that's... I mean, really your imagination's kind of the limit here. Anything below this is kind of a trajectory line, I think could end up being like a springboard. So for example, if this went sideways down, I think this could be a quick springboard back up. I'm just scooting the chart over a bit. I don't know. It already kind of went below. So, yeah. So in terms of like a wave, is this unexpected? Not really. Like we pushed over. We were sort of thinking that on Tuesday that we'd probably come back down because we haven't really retraced to come back to the creek. Honestly, this could come really, really low and make like a double bottom. It wouldn't surprise me. So I'm just going to have to wait. I don't know. Maybe 198 acts as support. Like this previous top over here. You can see why that might be the case. And then I think we react back to the upside. And that's where you get the breakout move. Go back and look at some other advances. Yeah, so back to like that drop off here. And then advances. Yeah, we've had some deep retracements on IWM. These are almost full on throwbacks. We'll see. I'll have to wait. I don't think it's going to be all done today, but maybe by tomorrow we'll have a really good answer. I think it'll be very evident, hopefully tomorrow morning. Usually the first couple hours of the day defines the rhythm on a Friday. So, yeah, you know, this is doing weird stuff on MPW. Kind of looks like, it doesn't really look like much of a spring to me. It's still got divergence on the 1 hour. It's Still going down. It looks like it's not sure, and I don't know. I still feel like it could just have another big drop in it over here. It advanced back above the trend, so the motion itself has decently high volume locally. And then it came back up and it's settling. It's on the outside of this guy. So I think it made the creek jump. It just did it lower. So yeah, unless it's like a double fake out or triple fake out, 1, 2, and 3, this could be on the up and up. I'm going to wait and see if it comes back up and finds support on 478. This morning I was saying it didn't really look great because it's not really doing anything here that's particularly positive in terms of like this double up thrust that wasn't really positive. And then when you look at the big picture, it kind of reminds you of those flattening where you get those big drops. So it's hard to know. But I'm seeing this and I'm like, I don't know. You know, it looks like there needs to be at least one more bullish reaction to the upside. And from where I'm sitting as a range, that could be all you need to kind of get out of the almost like a spring-like action. So yeah, we talked about this setup as a wave, and I think I had estimated that it would like kind of like be there by now. That's today, so it's not there, it's at a low. But there is a nature to this wave, which is that the bottom here goes all the way back to the 23rd. So Tuesday, there's Tuesday again. It's come up a lot on AMC and GME today. So Tuesday morning. So same deal. Like I think if it's going to make that move, it's got to do it here. I'm wondering, we might get a big Friday. It could be really fun. I hope so. Nothing really to say yet. All right. Y'all have a good one. I will try to catch up with you later. If I need to, I'll do a recap, but otherwise, I probably won't. So, hope you guys have a good one. We'll talk to you later.